Hello.
Hi.
Hello. Very good morning, ma'am. This is Priya from CII.
Hi, Priya.
Ma'am, we'll start with the inaugural session at 11 in another 3 minutes.
Yeah, sure.
All right, ma'am.
So it's a 5-minute discussion, right?
Sorry?
It's a 5-minute session, right?
Madam, you can go for 7 to 8 minutes. Not an issue at all.
No, that's not the point. I'm prepared for 5. In fact, I have 11 o'clock meeting that I've taken a 5-minute grace, so I have to exit. fairly soon.
Payments, yeah, because otherwise we have time actually. Earlier it was 2 guest of honors, but now we have only 1 guest of honor. So we have actually a time frame in this regard. So you can take up, instead of 5, you can go for 7 minutes or 8 minutes.
Yeah, and I will be able to share something.
Yes, Priya is there. She will help you out with regard to that presentation, all that. So you can you can yourself share those presentations on those slides actually.
Thank you.
Yeah, thanks very much.
Good morning, everyone. On behalf of CII and on my personal behalf, it is my privilege to welcome you all at the conference on digital and cashless economy. The conference is hosted on CII Hive platform and live streaming is on YouTube. The conference is joined by 180 plus delegates through Hive platform. Now, I would like to introduce our eminent panelist of the inaugural session, Ms. Ruchi Mukherjee, Conference Chairperson and Director, Public Policy and Corporate Affairs, PayU India, Mr. Moni Shah, Partner Deloitte India, Ms. Parveena Rai, Chief Operating Officer, National Payments Corporations of India, Mr. Bipin Preet Singh, Chief Executive Officer, Mobivic, Mr. Amita, Abhimanyu Munjal, Chairman CII Northern Region and Joint Managing Director and CEO Hero FinCorp Limited. Shri Mandesh Kumar Mishra, Joint Secretary, Department of Finance Services, Ministry of Finance. Ladies and gentlemen, now may I request Conference Chairperson Ms. Richa Mukherjee to deliver her welcome and opening remarks. Over to you, ma'am. Ms. Mukherjee, am I audible to you?
Ms. Richa, may I request you to please share your opening remarks?
Thank you so much. I think there was some error in the network. Thank you. Good morning and very warm welcome to Shri Bipin Preet Singh, Founder and CEO MobiKwik, Madam Praveena Rai, Chief Operating Officer, National Payments Corporation of India, Shri Abhimanyu Munjal, Deputy Chairman, CII Northern Region and Joint Managing Director, CEO, Hero FinCorp Limited, and Shri Munish Shah, Partner, Deloitte India. Ladies and gentlemen, very good morning. And on behalf of CII and on my personal behalf, I extend a very warm welcome to all the distinguished speakers and audience. I really appreciate and thank you for taking out time for us from your busy schedule to grace the inaugural session of this important conference. We look forward to your addresses in today's conference. Ladies and gentlemen, in these unprecedented times with zero contact protocols, thanks to our digital advancements, we are able to convene the session today. So request everyone to stay safe, everyone. Digital India program is a flagship program of the Government of India with a vision to transform India into a digitally empowered society and knowledge economy. Contactless, paperless, and cashless is one of the key themes of Digital India. Fueled by the unfortunate COVID-19 pandemic, India saw a massive tectonic surge in digital transactions, and this is in tune with the Prime Minister's vision of Digital India. This is the opportune time to build a robust economy and ecosystem through safe, secure, and accessible digital payment solution. During the event today, we'll hear about exciting trends in digital financial inclusion, such as speed of change and why it matters, how digital finance is changing the value proposition for customers and institutions, and the various impacts from microfinance to remittances to government to persons payments. These and many other emerging services have offered many new opportunities to better serve customers, better manage their risk, and better build new business models and form partnerships. In all of this, governments, policymakers, and indeed development partners like RBI and other key regulators, and of course NPCI, can play an important role. The digital economy is rapidly developing worldwide. It is one of the most important drivers of innovation, competitiveness, and growth. The advancement and adoption of digital technologies and business models will enable companies to achieve greater scale, penetrate new markets more swiftly, and understand the customers better. The collective participation underscores the potential business and new job opportunities that this sector is expected to create in Asia Pacific. This is in addition to the maximizing development impact by bringing more improvements in the living standards. The digital footprints we make in every transaction or interaction can help financial service providers to interact more easily and adapt to the financial needs of diverse set of customers. The Government of India has consistently maintained that pushing digital payments is a key policy objective. The Union Budget 2021 earmarked INR 15 billion for schemes towards incentivizing digital payments. And as we know, the transaction volumes of digital payments in the UPI network increased by approximately 58%. It crossed about 2 billion transactions in October 2020, and we are in August 2021 now. So we are very well poised to reach USD 1 trillion mark by 2023. That's the guesstimate. The digital payments ecosystem in India has been shaped by NPCI through its diverse range of payment products, including UPI, RuPay, IMPS, Bharat Bill Pay, and others. And I'm sure Madam Rai will talk about it in more detail. Of course, existing white spaces can be penetrated through new products focused on enhanced customer experience. Today, as also part of a topic, we are doing e-payments and money transfers, thinking they happen in real time. But at the same time, this money still has to be physically moved between the banks, known as interbank settlement. With CBDC's central bank digital currency invoked in the entire globe, there won't be the need for interbank settlement. The digital payments will be the final transactions. It presents the opportunities in the financial ecosystem through greater efficiencies and reduced risk. CBDCs brings greater functionality, productivity, and can potentially transform the financial ecosystem. The discussion around digital and cashless economy would not be complete uh, if we don't talk about financial inclusion, which has seen the exponential growth in the recent years by significant innovation in by both the collaboration of public and private sectors. The central government, the RBI, NPCI, they have all proactively attempted to integrate the population in broader financial system. A majority of the population has access to an open bank account. A portion of them even know how to conduct cashless transactions. The facilitative frameworks like Aadhaar, KYC, India Stack, DBT, UPI, OCAN, etc., serve as a necessary catalyst to make the financial inclusiveness process more digital, more streamlined, convenient, and effective. Before I conclude, I would like to share that moving to a cashless society was steadily stepping up before COVID-19, but it has accelerated to a great extent by the perceived risk of infection via the currency that we hold in our hands. We expect the ease and convenience of this contactless payments to see them remain the first choice of the consumers, and it grows from strength to strength from here. India has always been at the forefront of development and innovation, and the contribution towards strengthening the payment ecosystem this year is expected to be no different. Thank you. And with these words, I once again welcome all the speakers and the audience. I would now like to invite Sri Monisha for the theme introduction. Thank you.
Thanks a lot, Madam. I think that was, very insightful. A warm welcome to all of you for the Digital and Cashless Economic Conference. The theme for this year is, the next frontier in India's payments innovation journey. As all of us know, India is the recognized global leader in digital payments as well as payments innovation. And we provide the cutting edge solutions to rest of the world insofar as digital payments go. It's also true that over the last decade or so, there's been no other industry as the payments industry where digitalization and innovation has created such a huge disruption. And this is again likely to continue over the next few years. So today what we have is a great foundation for building on the digital disruption that has happened in the payment space. So we have reportedly over 200 million users of active digital payments. Thanks to all the initiatives like Cashless India and Digital India, the total volume of digital transaction is over 43 billion in the last year. And this translates into average of 120 million daily. This number, as per industry estimates, is going to increase about 15 times. So it'll touch about 1.5 billion daily transactions in the next few years. So what this translates is that each and every Indian is making one digital payment transaction every day. So one can imagine, the volumes which are associated with this, but also the value which will get created in the industry. As payments capabilities have become embedded in nearly every conceivable device and software solution that we use, the industry itself has also responded strongly in terms of building stronger payments infrastructure, product innovation, and obviously, greater customer centricity as well. Today's seminar is all about, emerging payments landscape, the current challenges, and the next wave of innovations in the space. So where the industry is poised right now. So on one hand, we have very strong demand drivers in the space. So these are primarily customer-led drivers, and they are emanating out of unmet customer needs. There is a demand and market for, contactless and less cash kind of solutions, but also for hyper-personalized services, secure transactions. And given the under-penetration which is there in the Indian financial services space generally, there is a natural affinity for payments to become a hook, which can then bring in, other financial services as well. So we will see a lot of action happening on what we can call as embedded financial services. So other financial services products which are embedded along with the basic payments products per se. So in addition to the traditional services, customers also want value-added services. So identity protection, for example, real-time cash management, purchasing insights, value propositions which will eventually increase greater customer satisfaction and loyalty. The payment providers themselves have also pushed the envelope a lot on the digital innovation. So this is probably an era where the supply is sort of creating its own demand, and it's sort of a great positive spiral that everybody in the industry is actually witnessing. So by creating a seamless customer experience, loyalty platforms, ecosystem value proposition, and embedding broader financial services within payments offering, I think that the supplier of payments services have really given the push to digital innovation. When you add the broader regulatory push to bring transparency, speed, security, maybe look at alternate payments infrastructure, we see that we will see a lot of investments in this space, and innovation will be at the forefront of it. One important thing which is likely to give significant tailwinds to the innovation is what I'm calling as India's data dividend. So never before in our history we had access to the amount, the quality of data which we now have available. And the next wave of innovation in payments is likely to be predominantly around data monetization. So, as competition increases, as regulation puts a lot of pressure on the profitability of basic payment services, the service providers will have to start pivoting their business models, systems partnerships that to leverage data monetization. And when you look at data streams which are more granular, right, or which are multidimensional, that you can triangulate the location and the preference, and look at the social history to come up with unique customer value propositions. Now, this will give a lot of cross-referencing insights, which is going to transform the way innovation is sort of looked into. Given our size, maturity, and complexity, we are always going to have, challenge between innovation and regulation. So it will be, believe that you're taking two steps backward and one on the side, and so on and so forth, because checks and balances are happening. And then from a regulatory perspective, customer protection is paramount. That and from an industry point of view also, this will help in building the trust as well as the long-term viability of business. Today, we have some of our leading payments and financial services industry experts who are going to provide their views on some of these emerging trends and challenges, as well as where the next wave of innovation is going to come from. We have two very interesting panel discussions lined up as well, one around the payments infrastructure and the second one around the central bank digital currency. We look forward to a very fruitful interactions with our experts and the panelists over here. Thank you.
Thank you, Shrisha. Thank you very much for your remarks. I would now like to invite Madam Praveena Rai for her address. Over to you, ma'am.
Thank you, Richa, and great to be participating in the discussion today. In these digital times, nothing like having a digital conference on digital payments, right? So just give me a moment. I just have some very simple material that I thought I'll share. Is this visible?
Yes, ma'am, it is.
Thank you. So I thought, I'll just kind of set the stage a little bit for the exciting conversations that you're going to have at the conference. And since digital payments is really all about solving for cash, and I understand, Monish just spoke about all the other opportunities that exist on the digital payment rails, but we still have a lot more of the basics to do, right? So, while we build the basics out and digital payments really replaces cash in the market, and then we look at what we do with the associated value-added services, data, so on and so forth. So the starting point, however, continues to be dealing with cash, bastions of cash. And to set the stage, and this is all public data, and I'm preaching to the converted here, so everyone would have access to this. You to reference the government's digital payments data, and this is really what it looks like, right? So there's a 6x growth that has happened in the last 5 years. We are close to hitting about 60 billion transactions of digital payments in the country, which is absolutely no mean feat. And all of this has been an outcome of the entire range of digital payments that we have. And I've been asked many times, don't we have too many products trying to do too many things? But actually, each one of them has a role to play. They address a certain kind of a user segment, solve a certain kind of purpose. If you start with good old RTGS, which of course is run by RBI and handles interbank settlements and large treasury transactions, all the way to an IMPS or a UPI, which looks at much more smaller values, sub 1 lakh, and has really created a behavior around micropayments, both for merchant payments as well as person level payments or remittances, as you may call it. And there is net banking, there is Aadhaar based payments, there are toll payments. So if you look at tolling, that is one bastion of cash. If you look at transit, right, that is one bastion of cash. And there is a lot more work to be done here, because I don't believe that we are in a position to say that we have a billion Indians who are actually all using digital payments. So the inclusion part of it at the top end of the spectrum is also still open, and certainly is open at the bottom end of the pyramid there. And what is it that we can set for ourselves? And you have two very interesting discussions today, and I'm sure there's a lot more that can happen in the digital payments world. How soon can we take this to 100 billion, right? Is it 2023? I mean, I thought that's a very comfortable number. Or can we do more, or can we do less? So if the industry really puts its head together, I think we can make this happen. And what are the drivers? The real driver is going to be technology. And going back to all the opportunities that exist, Richa, you spoke about the white spaces that are there to be addressed. Monish spoke about embedded payments. There is distributed finance. There is everything that we can do with AI. I think we're just scratching the surface of all those opportunities here. So ultimately, all those solutions and services and that very cool user experience is going to be delivered by technology. And it is the advances in technology that we are going to take advantage of to create those experiences to address those market needs. And what's the headwind? The headwind is really around talent. The demand for talent is going to be extreme. The supply of high quality talent, as always, is going to be limited. So as an industry, it may be time for us to really look at how do we continue to hypercharge that pipeline. How do we develop that talent out so that it's not the same 100 people that everyone is fighting for, and that's not going to be enough for us to make all of these dreams into reality. So I want to just leave it at this, and keep these as potential food for thought, and something for the rest of the conference to also address and mull over as you move forward. Thank you so much.
Thank you, Madam Rai. That was quite insightful. Thank you for your comments. I would now like to invite Shri Bipin Preet Singh for his address. Over to you.
Hi, thank you. Thanks for CII to inviting me to this excellent panel. And Pravina, great to see you here. Um,
Hi, Vipin.
yeah, hi. So I think, I think Pravina has already talked about what's been happening over the last several years with the efforts of NPCI and all the, payment companies in terms of taking digital payments deeper and deeper into the ecosystem. And that's where, MobiKwik at our level, we are trying to play a very active role in terms of not just getting people to make payments using the money in their bank account, but also now creating a more deeper, stronger reason to move to digital payments. And so while, the first wave was, built by cashbacks and now QR codes and penetration, we believe that, there is a huge opportunity to bundle credit in the deeply into the payments ecosystem. And that opportunity, what we call as buy now pay later, it could emerge as a next big thing, or maybe has already emerged as a next big thing in digital payments, not being seen as a instrument of credit, but actually seen as an instrument of payment with great convenience, great flexibility to the customer, and at the same time obviously has some element of credit, which can do a huge, service to the ecosystem. Because, we are in a country where still, while digital payments have grown by leaps of bounds, maybe 200 million, 250 million people are paying digitally today overall. But people who have credit cards is maybe 35, 40 million people. Total 50, 60 million cards are in force. So just the penetration of credit in this country is so less, and through the traditional mechanisms, it's obviously continues to accelerate, and banks are doing a great job. But we believe that digital can actually exponentially accelerate it. And the payments ecosystem that has been created, and people's ability to and inclination to pay online, especially, right, instead of paying with cash, is a behavior which can create this penetration of credit. Of course, this involves a lot of different pieces. It involves understanding of credit. It involves, creating richer data sets, and the RBI has obviously come up with many different frameworks like account aggregators, etc. But ultimately, the objective is that how do we give 100 million, 200 million people equivalent of a credit card? And that's the only way that can be done is digitally. Because in digital, you can start with a behavior which already set in, like somebody is just making bill payments, just recharging their mobile or paying for their bills, or just on doing online shopping, right? Some of the online platforms, you see, they have become so big. Zomato just went public. What people are buying food online, people are buying grocery online, medicine online. There's a treasure trove of online transactions which establishes customer behavior, and these people are digitally savvy now. And at least in our view, they are now savvy enough that they should be upgraded to the next level. And that next level is essentially give them credit, let them spend the money, and let them repay it back, and do it in short cycles for short tenure, 15 days, 30 days, etc. Why? Because that essentially creates the credit discipline. In my firm belief, credit is all about understanding the obligation and creating that education in the minds of the masses, right? Which is still which is still low, for especially for people who are not salaried, and most of India is self-employed. So there's a huge opportunity to um, use this payment behavior to inculcate credit discipline and credit behavior in the form of this buy now pay later. And MobiKwik is playing a critical role in this, but there are other players, lots of other digital players in the market who are working on it. And we believe that a time may come when buy now pay later will actually become one of the mainstream methods of payment, right? Not just as a method of credit. And it will then create the next level of evolution where people can take EMIs, they can get personal loans, and basically just move higher up in the financial ecosystem. And that's good for everybody because this new set of customers will then consume more, and the amount of data that we will have will allow them to sell them more services. You understand them better, their net worth, their needs around insurance, their needs around how to manage their money. But fundamentally, I believe this credit piece is which is a missing piece in the payments ecosystem. And this is where there is a real opportunity. Thank you. I think that's what I wanted. Okay, of course, I go into details, but what I wanted to talk about.
Thank you, Bipinpreet Singh, for your address. Thank you. I would now like to invite Shri Abhimanyu Munjal, CII Chairman, Northern Region, for his address.
Good morning, everyone, and thank you on behalf of CI for this very timely session. And I think today this is the right time to have discussions on subjects like the cashless economy. And I would like to also thank the fellow panelists and Shri Mandesh Kumar Mishra, Joint Secretary, Department of Financial Services, Ministry of Finance. So thank you, sir, for joining us today, this morning. Digital payments in India have witnessed a steep growth curve in the last few years. 48 billion digital transactions were recorded in the calendar year 2020. Despite COVID-19 pandemic and its effect on the economy. This growth has been fueled by new players entering the payment ecosystem, new innovations, technologies, initiatives taken to address customer convenience and forward-looking regulatory changes. Digital payments now are set to grow continually and will adopt larger scale in 2021. The payments space has always seen the emergence of players from multiple categories, ranging from device manufacturers and big tech companies to telecommunication companies that are working to provide seamless experience to our customers. Over the years, companies have diversified existing business models through expansion of services such as PSPs, payment banks, wallets, and marketplace services. Wallet companies are exploring opportunities in offering credit and payments banking, which Bipin just spoke about, BNPL. Fintechs are providing solutions ranging from instant loans to wealth management, buying, selling of digital gold, and digital insurance. PSPs are planning to scale up their products by providing lending and neo-banking services, personal loan and merchant cash loans in participation with banks and non-bank financial corporations. Additionally, regulatory initiatives have encouraged many startups to explore and develop solutions that expand the use of digital payments methods, especially for the unserved population of India. And like Ms. Rai spoke about 100 billion transactions by 2023, I think, ma'am, it's a very doable number and we can probably do it faster. We will observe many new entrants in the coming years who will explore innovations in the offline payments, voice recognition, payments, etc. Digital payments have evolved from being plastic cards based to mobile-based transactions. Offline payments, a largely unexplored area, are the next big opportunity in the payment space. They have so far been mostly used in the transit use case. However, offline payments catering to other use cases will be developed and help bring significant portion of the underserved and the underserved segments under digital payment fold. This will particularly benefit cities with internet connectivity is sparse. Organizations that design with privacy security in mind will thrive. Investing heavily in encryption and other security measures will be paramount to securing private data of all Indians. The new private entrants are coming with stronger encryption and extent of high security policies to their payment platforms to facilitate secure and communications of transactions. As a matter of fact, growth in consumption across emerging economies is subject to come largely from rural areas. Unlike aging nations, India will continue to remain a young nation with a median age of 31 by 2030. And a large part of this young population will be in the rural areas. India has been in the forefront of global innovation in digital payments, and this trend will continue throughout 2021. Stakeholders are trying to explore the global payment space and develop innovative solutions. Some of these initiatives that are gaining prominence and aid in continuation of innovations are cross-border remittance, Pan-India umbrella industries, Payment Infrastructure Development Fund. The central bank digital currency, CBDC, currently is being explored by Reserve Bank of India for retail and international trade payments, could have much larger impact on the financial ecosystem. It will be instrumental in promoting grassroots level financial inclusivity and modernizing the banking sector apart from creating a cashless economy. While many see CBDC as a legalized replacement to private digital currencies, CBDCs are just going to be the digital replica of physical cash in circulation in the country. RBI is creating a digital version of the fiat currency in circulation. Currently, there is only an alternative. The only alternative to physical currency is debit cards or credit cards, which are not accessible to all citizens. While summing up, I would like to emphasize, to make our contribution in the fight against COVID-19, we must take safety and precautionary measures. With contactless transactions are being encouraged, let's opt for a safe and easy digital payment modes. The Conference on Digital and Cashless Economy is yet another step towards realizing our Honorable Prime Minister's aim of Digital India, wherein technology and digital modes of transaction will enable faster delivery of public services while ensuring transparency and accountability. I wish this conference a grand success. Thank you.
Thank you, Shri Munjal. Thank you very much for those words. I would now like to invite our guest of honor, Shri Badnesh Kumar Mishra, Joint Secretary, Department of Financial Services, Ministry of Finance, for his address. Over to you, Mr. Mishra.
Good morning, and first of all, thank you, CII, for inviting me. Although I have a very tight schedule, but the subject matter is very close to my heart. So I try to squeeze some of my time to come and be with you. I also give my lot of regards to the panelists who have just spoken. Let me tell you one thing. Way back when I was doing my graduation of engineering, I caught hold of one book in my library, which was, the edition was of 1936. There was one story where the writer is writing about the payment. And I still remember the writer is telling that the day will come when people will handshake and the payment will be made. So you can imagine the writer's imagination in 1936, that payment can happen by just shaking the hands. So as on today, we have reached the mobile shaking is happening. Maybe by the watch shaking will happen. The Apple Watch is there, some other watch will be there, so the digital transaction will happen. Maybe 10 years down the line, we'll be wearing the chip in our shoulders, and we will just take making the transaction. So such is the scope of the digital transaction. And India being the powerful hub or powerful talent pool of the information technology people who are actually serving all over the world in this era. We certainly have a lot of advantage and edge over it. So we must try to what you can say, tap over these talents. And I'm seeing some of the panelists here. They are partnering some of my team in the recent initiative which has been taken by the government, like the e-rupee voucher, which has recently been created, launched by the Honorable Prime Minister. I see Pravina is there. So that is one such area where a more advancement has been done in that case, because you have now not only the person specific digital currency, we should also have a purpose specific. Say, for example, government wants to give somebody, or you want to give somebody some voucher, some gift, some money for a specific purpose. This is much more advanced in nature, because that money cannot be utilized for any other purpose other than the purpose for which has been designed. For example, you want to give your gift voucher in a rupee form, e-rupee voucher form, for somebody to go and see the movie. He can't utilize that voucher for any other purpose other than seeing the movie. So the targeted benefit for the government, what you can say, the lot of his schemes are going to be reversalized like anything. But in a larger scale, if you see the digital economy, what the conference is all about, it's not about the payments. We all have to see in the different sectors of the financial transaction what is happening. As on today, the India has only 7% of the population which is under the pension coverage. So digital framework provides a very fast and dynamic framework on which we can onboard for the pension coverage. Insurance coverage is the same. So if you want to grow fast, we want to give a coverage to large section of the people of the India. There is no other way but the digital framework which can provide us the tool to reach to those people. I am at my personal level, I am doing a research on the financial inclusion with one of my colleague professor in the Boston. We are analyzing the data of the subscriber of the PMJD account holders. Roughly 2.3 crores data we are analyzing. We could see that the digital transaction trend across the India, whether it is a backward state like Bihar, not very backward, or a very modern state like Telangana, the digital transactions are almost same. Other example I'm giving you is that if we have analyzed the trend of the digital transaction, out of 100, 54% digital transaction is done by the male, 46% digital transaction has been done by the female. So we are trying to find out, does the literacy actually affects the digital transaction, which we are hypothesizing? No, it is not. Once you are accustomed to knowing the numerals or some words, you can do the digital transaction. And to simplify further, NPCI has come the Aadhaar-based payment system. You can have your thumb impression, you can do the digital transaction. In one of the conference, I always used to say that initially people used to take the example of thumb as if you are a stupid person. But really now the thumb has become intelligent. You can do the digital transaction by your thumb impression itself. So it's no more a question of that you are a dumb person. So there is a large scope so far as the digital economy, digital financial framework is concerned. Only thing is that we have to put our straight on a very focused manner to see that which are the segments where we can actually utilize, where you can actually leverage the digital technology to see to it that the products are delivered in a time-bound manner and products are also designed. Today, when we interact with the fintech people, it is always said that the banks have certain products, how to deliver it through the fintech mode. But we have to think the other way around. We have this fintech technology. What are the products which needs to be designed to suit to this fintech? So we are challenging the banks to see to it that if this is the technology available, what are the products you can design to see that you can leverage this technology to deliver it. So it's both the way it should go. And recently, we have also put the challenge to the banks, the PSB banks, that when your Alexa is able to do all the work like owning the telephone, owning the phone, owning your fan, why can't we have the voice banking? This is the next generation. So we should have a voice banking system also needs to be developed, which basically which will be actually basing on the digital framework, but it will have a very different dimension. And for that purpose, we need to have a mindset of the scientist of the ISRO. I always say that ISRO, we don't have a capability to send a human being to the space, but we have thought of that we will land in moon, we land up in the Mars, and we have done so. So such type of motivation we should have with all the fintech people, the people who are into the digital payment system, the people who are into the banking system, people who are into the payment system. We have to develop that mindset, which the ISRO has. Recently, I have just addressed my bank, where I am a director, and given them the challenge. So now they have started scouring the resources. How come the voice banking can happen? Because this is the next generation digital payment mode has to come. Other thing, what Mr. Singh was telling about the digital currency. Yes, the digital currency has to come because that is the thing of the future. We don't have to count on the papers now. There will be a digital currency will be there for which the regulators are working. A lot of debates are happening about the cryptocurrencies, about the digital currency, but this is the end thing which has to come. There is no doubt about that. So with all these things like payment system, how to cover the people for the banking area, banking services, for the insurance services, for the pension services, for the giving the credit to them, all such things has to be taken into account in a holistic manner, and payment is one such aspect of it, which has to be made very smart, very robust, at the same time very easy, so that people don't have to bother too much about the what are the things to be complied. Still, I am seeing many of the banks' applications, the mobile app applications, are very cumbersome. It still has to be simplified in such a manner that people are, like in the case of like your toll collection, it has become so simple now. You just have to pass. Similarly, the case with the account opening, is the case of the insurance coverage, insurance product buying, for buying the pension products. The entire thing has to be on the digital mode, and for that purpose, this is a big challenge to all the people who are into the area of digital innovation to see to it that we touch each aspect of it, not only the payment, but of course, payment is the end thing, because anything you buy, any services you take, you have to make the payments. But we have to see in the very integrated manner, so that when the day will come where the India will be at the forefront. Still, we are in the forefront, providing the digital payment system to the world. But we can show to the world that yes, these are the things which we can take lead on, and we can provide you the solution for that purpose. I am interacting with the many of the people of the many of the countries. The way we are thinking, nobody is thinking. Let me tell you very frankly. So we have to take advantage of that lead, and you should take pride in that. And I must congratulate the CII for this purpose. At least they are putting a platform and making the people come and share their ideas, so that we can further look upon what best can be done. With these words, I say my all the best wishes to the participants for the conference, and thank you for inviting me.
Thank you, Shri Mishra. Thank you for your comments. Ladies and gentlemen, we have had an extremely productive session today. Adoption and deployment of new technologies, which is the key to these changes and the success of organization in payment business, as well as the adoption of new revenue and customer service models to stay relevant. Promotion of digital payments have been accorded highest priority by the Government of India to bring each and every segment of our country under the formal fold of digital payment services. It's great to learn from all of you and from the different ministries of the government, how they are doing continuously working on strengthening of digital payments infrastructure and creating awareness, which is very critical through promotions of digital payments with all the stakeholders to achieve the government's vision of making to make the citizens very empowered. We have seen more and more fintechs, more startups driving towards frictionless and seamless payments with customer-centric focus. Established players have to constantly evolve and bring in more technologies as their field changes. While concluding, I'm of the opinion that 2020 has accelerated the adoption of digital services in India in a way which no other year could have been done, fortunately, unfortunately. COVID-19 has pushed contactless digital payments to new age groups, locations in India, reaching to far-flung and rural areas, older age groups to begin a process of deep inclusion and in the areas and segments which were not earlier touched by digital and cashless payments for various reasons. As per Mr. Manish Shah, he mentioned about digitalization and innovation is a great disruption through various initiatives, which is being translated into the volume and number of transactions by Indian population. Payments and along with the embedded services of payments will be a hook to further drive the digital payments ecosystem. As Madam Praveena Rai also mentioned that we need to work on our basics and then we need to move to the value added services that comes along with it. Payments, as Madam highlighted, has increased 6x times till now, and it's only upward from here that we can go. Two key drivers for the next level of digitization are talent and technology, which needs to be nurtured and needs to be leveraged upon. As Mr. Abhimanyu Munjal mentioned, that growth in payments ecosystem is due to innovations, new initiatives, and of course, positive regulatory and government changes that have come along with it and have driven the payment ecosystem the way it is as of now. And as Mr. Vipin Preet Singh mentioned, that we need to create a deeper and stronger reason to move to digital payments, to bundle credit in payments ecosystem via BNPL, because it brings along the the factors like convenience and flexibility attached to it. And as Sri Madnesh Kumar Mishra ji mentioned that he also highlighted some of the key initiatives of Government of India like e-rupee, which are purpose specific for targeted benefits. He also mentioned about digital framework for pension coverage, financial inclusion, and he also mentioned about data analysis of PMJDY data, analyzing the biases in the digital transactions. So essentially, there is a large scope in the underlying technology to design products which are suitable for a large population. With these words, I would like to thank all my co-panelist speakers for their presence and sharing their perspective and insightful remarks on cashless and digital economy today in India. I now declare the culmination of inaugural session of the conference. I request all of you to remain connected for the next sessions. Thank you.
Thank you, Ms. Mukherjee. Thank you all the dignitaries for joining and sharing your valuable insight at this important conference. We are really honored for your presence and views. Now, we would be starting our panel discussion 1, Revamping India's Payments. May I take this opportunity to welcome the moderator of the panel discussion, Mr. Sandeep Sonpatki, partner Deloitte India. I would request him to introduce the panel and begin the panel discussion. Over to Mr. Sandeep.
Thank you, Priya. Can you hear me and see me?
Yes, sir, I can hear you. I can see you.
Great, thank you. So very good morning to all of you, and it's a great honor to host the first panel discussion for today, which is rightly titled around how revamping India's payment infrastructure. And as all the speakers before me have called out explicitly that how India as a market has been growing and thriving in terms of digital payments with the support from the regulators, from the government, from various fintech players, etc. So today we have an exciting panel. In fact, we have a very good blend of bankers. We have got a good mix of fintech players, as well as we have a very important stakeholder from the end users as well, from the Merchant Trading Association. So let me just do a quick round of introduction. So I am a partner with Deloitte, as Pia called out. We have from the banker side, we have Mr. Sandeep Ubale, who is the Chief General Manager in State Bank of India. He heads the Digital Transformation and E-Commerce Division. Mr. Ubale has been with SBI for more than 3 decades now, joining as a probationary officer in 1990, and has extensive experience over the years in retail and international banking, and also in trade finance. He's also done a fair bit of work in foreign offices as well in Maldives. and has been in his current role since May 2021. Thank you, Mr. Ogle. The other banker we have today is Mr. Vaibhav Joshi. He is a Chief Digital Officer at Equitas Small Finance Bank. Mr. Joshi brings 20 years of experience in banking, financial institutions, IT and software. So he brings a good blend of banking and technology. He's proficient in product as well as business functions with key expertise in digital banking, including payments, liability and lending credit products. Mr. Weber also has co-founded 3 startups covering payments, technology and food as well. And he was part of the Aadhaar rollout in the country where he delivered the enrollment for the first set of beneficiaries. And he's played a key role in one of the country's largest financial inclusion programs on business correspondent model. So welcome, Mr. Weber Joshi, for being part of the panel. Then we also have Mr. Praveen Khandelwal. He is the National Secretary General of CAIT. CAIT is a confederation of All India Traders Association. And CAIT has been playing a key role in helping drive adoption of digital payments in the country among the merchant community and the trader community. So they've been playing a key role. So Mr. Praveen Khandelwal currently is the National Secretary General of the association and has often been described by the media as a man of masses who is always alert in fighting the cause of the unincorporated sector of India. And that's one of the largest community as well amongst us. And I think if digital payments has been successful and has to be successful in India, I think this group will play a key role going forward. We also have Mr. Anand Bajaj. He is the Managing Director and CEO of Pay Nearby. Anand also has been an ex-banker. He's an alumnus of IMA and has over 18 years of experience in digital payments and mobility. Anand also holds 5 patents in banking technology and has worked earlier with Yes Bank, ICICI, and Ernst & Young. At Yes Bank, he was the President and Chief Innovation Officer, and where he steered several high-impact programs in digital payments. He's also actively participated in the steering committee of NPCI, and then also has been a member of RBI's ad hoc committee on mobile payments. At Pay Nearby, Anand and his team is committed to enabling the reach of digital payments and financial services at the last mile. So playing a very, very critical role in driving digital payments at the last mile. We also have 2 other fintech experts with us. We have Mr. Pratyush Hallen, who's the Chief Executive Officer at FinPay India. Pratyush comes from Indore. He's a BTech engineer, and he, in his earlier days, he actually played a key role in developing USSD-based payment solutions. He co-founded FinPay in 2016 alongside his co-founder, and FinPay currently enables digital banking, payments, and financial services for the last mile. So again, a key role being played towards digital payments. And his company has raised seed investments from ICICI and Ivy Cap Ventures. And they're also playing a key role as part of the steering committee of AEPS at NPCI. And lastly, we have Mr. Madhusudanan. He is the Chief Executive Officer and co-founder at YAP India. So Mr. Madhusudanan brings significant experience from, again, banking industry and payments. He's worked with Citibank and Visa. At Visa, he's played a key role in launching some of the payment products around financial inclusion. He's a first generation entrepreneur and currently running a fintech infrastructure business in Mumbai, which is focused on building the API standards for banking and payments community. So Madhusudan brings 2 decades of experience in building payments products along with a strong execution bias. So that's the panel we have today, a good mix of bankers, fintechs, and traders. So let me just set the context and get into the panel discussion. So as I said earlier, India obviously has been a thriving market for digital payments with a significant role being played by the regulator, the government, NPCI. We had Ms. Pravina Rai earlier today talk about how key role that NPCI has been playing. And as a country, really has witnessed an exponential growth, right? Many of us use digital payments every day. We use UPI, we use Bharat Bill payment system, we use FASTag for toll payments, etc. And today we are clocking almost at the country level 120 million transactions on a daily basis. And as Mr. Rai called out, that the near-term target they're looking at is reaching 100 billion transactions by 2023 in the next 2 years. And in fact, some of the reports also talk about growing 15 times by 2025, where on a daily basis, we will clock about 1.5 billion transactions, which what Monish also called out in his speech. So it's almost growing 15 times in the next 5 years, right? So what it really means is that, yes, we have done quite well. It's been a great journey, spectacular journey. India has been also a role model for other markets, especially the developed markets as well. And we've had several players interested in entering the India market and taking learnings from here and take it to other markets, right? But the question still remains is how do you achieve the next level of growth? How do you grow 15 times in the next 4 or 5 years, right? What are those new use cases that will drive the next level of growth for us, and where should you put your bets on? So that's one of the first questions that I would like to ask our panel members today. So may I invite so the bankers first, Mr. Sandeep Ubale, to give your views on what would be in your view the use cases or products that will drive the next level of growth based on what you see in the marketplace today.
Yeah, good morning all. Thank you, Sandeep, for setting the context. The State Bank of India, being the largest bank of the country, had been at the center of this revolution, and we had been promoting all kind of initiatives where the cashless payment or Am I audible?
Yeah, you are audible now, Mr. Ubale. There's a brief pause a few seconds back.
So what I was saying is that when we are talking about the how do we reach next level, let us go back a few years from where this all started. Let us go to 2000, when the public sector banks decided to go on core banking. From the traditional standalone systems, all banks decided to move to core banking, which was a real challenging exercise, and which was completed, I think, somewhere around 2005 or 2006. That actually laid the foundation, and that was followed by popularizing usage of ATM and internet banking. That is all where it started as far as public sector banks are concerned. The new generation private sector banks were born with all kind of modern technologies and enablers. But for the SBI and other public sector banks, it was a new journey which we embarked upon, because we cater to more than 80% of the actual population. So the next level can be reached only after we examine as where does our foundation at present is, from where we started and where we are now. So we need to first strengthen our foundation. We need to have right kind of technologies and right kind of capacity infrastructure in place to cater to the huge potential that is on its way, finding its way towards banking sector. The cross-border remittances and the payment solutions for rural India. And there are several local bodies spread all over tier 3 and tier 4 cities, where still the cash payment is more popular or more in use as compared to the digital payments. And these are the areas where which we need to tap. But at the same time, we need to look at our whether our fundamentals are right and whether our foundation is strong enough to take this load. The second thing is we cannot ignore the risk that comes along with this technology or the digital transactions that we are talking about. So how do we, what are the use cases as far as the risk management is concerned, and how do we build some mitigating measures around it so that when we embark on this journey, We ensure that not only it is seamless and a very pleasant experience for the users, but at the same time it is very safe and secure. So the proactive risk management system which has been brought in recently at the behest of the regulator will play a very important role in this area. So this is where I will take a pause and would like others to contribute their views.
Thanks, Mr. Ubli. Thanks for your perspective. Vaibhav, do you want to go next from Equitas perspective? What's your view to say? What are those use cases? Mr. Mishra earlier also in the day talked about e-rupee being an innovation, a grassroots level innovation, which will drive purpose-specific payments. So that could be one of the things. But any other views? I mean, there's a lot of talk about cross-border payments, instant bill payments still under-penetrated.
Sure, Sandeep. Definitely. So, good morning, everyone, to my fellow panel members as well. Sandeep, I think that, digital payment space has grown very widely in the country today. Okay. There have been some great innovations that have taken place, and NPCI has been the flag bearer in these innovations. So from a product perspective, I think that we have developed some great products in this space. But I do agree with you that there are white spaces and, there are areas where the development can happen. One of the latest innovation, the e-rupee, a prepaid voucher on UPI, it's an amazing innovation. But having said that, right from the time IMPS was launched and then subsequently UPI was launched, and then, we saw the launches of AEPS, DBPS, APBS for that matter, where, the subsidy disbursements from government were streamlined, I think, or Jan Dhan Aadhaar Mobile, the advent of JAM. I think there have been a lot of use case driven spaces that have been there, and those are the spaces where there can be solutions on top of the existing products that have been created by NPCI. Now let me give you some certain niche examples, and while I don't want to get into cross-border remittances, because yes, cross-border remittances is a fantastic area where a lot of innovations can happen, and we can get into something like a real-time cross-border remittance, okay, which is something that will soon happen. But having said that, and technologies like blockchain will make those things happen, or technologies like international wallets will make these things happen. But I think there are dime a dozen use cases within the country itself across industries that there is a lot of focus areas. I'm sure Anand Bajaj, when he speaks, he will shed a lot of light on that. So good to see that he's there on the panel. He has been a mentor for me for the longest time ever. So having said that, see, I think on the corporate side, Sandeep, incentive management, expense management are two very important areas where I feel there can be great innovations. If we talk about something as trivial as incentive management, then we see that, this entire supplier manufacturer ecosystem, when Diwali time comes or when festival time comes, all these manufacturers and their entire distribution are set to see a whole host of incentives that are rolled out, right from gold incentives to gift vouchers to gift cards and so on. I think there is good amount of innovation space over there for a robust financial product to come in, not just riding on a gift card kind of a thing, but an entire mini ERP kind of an ecosystem where that which gets tagged to the manufacturer ERP, and then the incentive gets rolled out right from there. Okay, same is the case with expense management. We have seen that hyperlocal is taking up big time today in the country, and when we get into hyperlocal, we see a lot of this mom and pop kirana shops, and within that hyperlocal app for those mom and pop kirana shops or for the smaller MSMEs, what entities now innovating is they are building a plus product. So they are building in inventory management, they are building in invoice management, payments, taxation, and so on. So there is a space to also develop something like an expense management. What happens by that kind of an innovation, Sandeep, is that at the end of the day, we end up getting that bottom of the pyramid strata of that blue collar migrant worker who is working over there in that particular shop. But today he may not have a bank account to start with, or if he has had a bank account, he would have given that debit card back to his parents and still earning in cash. by merging this hyperlocal concept or the shop kiranas of the world and building in expense management within that, we are enabling that particular blue collar migrant population to become digitally empowered into the banking fold. Okay, but that's a very important innovation, I think, that can happen. Of course, then there is the supply chain ecosystem. So the structured or the secured finance supply chain ecosystem has already seen a lot of innovations, but the unstructured one, okay, where we are now seeing buy now, pay later kind of products for on the consumer side, I think there is good amount of space on the buy now, pay later for the retail side of things within the supplier ecosystem. So a lot of bot-based innovations, a lot of AI, ML-based innovations, if they are brought in, then what can happen is a real-time financial credit profiling of that particular retailer or the particular within the supplier ecosystem can happen, and then a real-time credit line can be availed, and subsequently the settlement can be disbursed, and this all can be within the ecosystem. Okay, today we talk about interoperability, but I am sure wherever we are talking about interoperability, what happens is at the end of the day there is a a service fee, there is a switching fee, there is a a small interchange or a MDR component that seeps in, and majority of the times most of these entities are not happy with that particular component. So that is where if we create an ecosystem kind of a solution over there, then yes, that can work over there. There are areas like cashless ecosystems for healthcare. Healthcare is a major area. Of course, a lot of the healthcare is already automated because of health insurances and stuff. But having said that, a lot of the older generation still doesn't avail the cashless healthcare. They still go by wherein they pay for it and then they get it reimbursed from their medical service provider. Plus, at times there is a component that the patient himself has to pay. Sometimes it is 80% paid by Mediclaim and 20% paid. So, and a cashless ecosystem wherein the moment you get into an hospital, from that point onwards till the time you get out of an hospital, if there was a card or if there was a mobile app through which all your expenses are tracked, including your pharmacy expenses, including your IPD, OPD, including any medication, something that is done, then that's a beautiful ecosystem-based solution that can be developed within the healthcare space, and same goes for the education space as well. And last point on the government white space in the government thing, I think subsidy rollout has been fantastic in the country. India has been the torchbearer of these rollouts, especially since the advent of Jan Dhan Aadhaar Mobile and APPS, which is Aadhaar Payment Bridge System. We have seen the application of PFMS, Public Fund Management System, happening like nowhere else. But having said that, what happens is the subsidy rollout happens and the subsidy gets transferred into the bank account. After the subsidy gets transferred into the bank account, what is happening to that subsidy is something that is, the subsidy is given in the form of money. Okay, I think there can be targeted subsidy-driven solutions. Okay, targeted subsidy-driven solutions, and let me give you a case in point over there. Okay, if we are talking about something like a fair price shop, like an electronic public distribution system, EPDS system, so there, if the subsidy was only transferred at the time of the transaction, which is being carried out at the fair price shop, which is authenticated by a biometric, and then that subsidy settlement only happens to that fair price shop post a successful transaction, authenticated biometric, then it makes more sense rather than the subsidy actually getting transferred into the bank account. Same is the case with maybe something like a farmer subsidy, fertilizer subsidy, something, and so on. So yeah, I mean, I can go on talking about white spaces, but these are some things that come on top of my mind.
No, these are great examples, Vaibhav, and I completely agree with you on some of the useful white spaces you talked about, right? Supply chain. I mean, a lot of transactions still don't happen on the digital platform, and I think some of the and I think we had some example also, right? What Vipin had said earlier, that some of those payments would also be linked to credit, as you said, buy now, pay later, right? And that can drive really the payments. So some of the use cases that you talked about, and also coming to the point that do we need a different kind of infrastructure for that, or can the existing infrastructure that you have, which what NPCI offers today, can many of these use cases ride on that same infrastructure? I'll come to the Anand as well, but just a quick point, Vaibhav, there on your view.
So Sandeep, I think NPCI has created a fantastic infrastructure as far as these products are concerned. If the question is there a room for any additional infrastructure or any additional innovation? Yes, there is definitely room for additional innovation because when NPCI was not there, we never knew that some innovation like a AEPS was possible or a innovation like a FASTag NETC was possible. But having said that, yes, there will always be room for innovation. The infrastructure that NPCI has created today is also being extended to cater to new use cases. So if the question is whether all of the use cases can be catered by NPCI's infrastructure, answer is possibly no. But the use cases that are coming up, NPCI is innovating and NPCI is also creating products. So the point that needs to be noted over here, Sandeep, is that NPCI is working hand in glove with the industry and NPCI is investing in the infrastructure that is required to cater to the demand. That point is more important rather than talking about whether the infrastructure is enough. India is a global leader when it comes to digital payments, when it comes to innovations in digital payments, and there will always be room, and my fellow panelists will agree with me, there will always be room for new infrastructure set up to be carried out based on the innovations that are being carried out. Okay, but having said that, NPCI has been doing a good job. And possibly yes, as we speed up the innovations, maybe the speeding of infrastructure enhancement will also be needed.
Thanks, Vaibhav, so much. Okay, Anand, I know you have a lot of ideas and thoughts to share. It would be great to hear your views on what are those emerging use cases in your view.
I'll compliment Vaibhav, and that's a well-deserving glass of water to Vaibhav that he drank after the wonderful oration of the ecosystem. And thank you for the kind words, Vaibhav. I'll give a perspective, Sandeep. You will relate to it, and most of it what SBI said and what Vaibhav said and what we will hear more is that how you look at with what lens are you looking at the ecosystem. I see the white space when you say white space, 7.5 lakh villages. I see on top of it only 105,000 and some change bank branches. Only 32,000 of them are dedicated to semi-urban and rural. I see 2.5 lakh ATMs, 80% of them co-hosted with a branch or urban centric. I have 20 in Powai. I can't count, but guess 3,000 in Mumbai. So that leaves odd 70, 80,000 ATMs for the entire nation. 75 crore bank accounts seeded with Aadhaar, 1.46 trillion INR unwithdrawn lying in those accounts where chief economic advisor of the country is saying that people are not able to withdraw that money. It's not out of place to say bank hai par banking nahi. Yeah, accounts have been opened, DBT subsidy has been put in there, but the withdrawal access points are missing. Great amount of work done by NPCI and by all partner banks, PSU and private sector banks in reaching out as far as they can. Of course, one has to consider viability, and which is where our theme of Har Dukan Digital Pradhan comes handy. At Nearby Technologies, as we we say that reaching out to the last mile is our first priority. Yeah, taking the high end of technology in a simplified, sachetized, universalized manner to the mass India is what our priority is. And that said, we are delighted to share that we have 5 million downloads, 50 lakh, which is in Indian context. 38 lakh users have registered their details. 2 years of COVID lockdown is holding us back to go and activate our digital Pradhan partners. 500,000 of retail partners are active and process 6,000 crore of digitized, sachetized financial services every month. Last year, we just submitted to the nation, saluted to the nation, $7.5 billion worth of transaction processing, 25%, 20% of what Pine Labs is doing. We made profit equivalent to what Fino has done last year, about 20 crore, give or take. So responsibly taking the high end of technology to the bottom of the pyramid. Now, that said, with the white space, if India is waking up, fantastic times that we are all together, part of it, Sandeep, you are doing great job at Deloitte yourself, and so are my other fellow panelists. India will have to relive the inclusion from ABCD right from the scratch. And what I mean literally is A is for ATM, B is for bill payment, C is for card payment, D for domestic remittance, EMI collection, financing retailer, granular liability, gold or gift, what you call it, hyperlocal enablement, I is insurance, J is jobs, K is khata, and so on. Loan, mutual fund. This actually is like that. But what is important is Saregama Padhanisa is written already. No one is touching a new note of Sargam. But how A.R. Rahman composes music and how Anu Malik is he playing two different galleries. So that is the opportunity. What do you see? With what lens do you see? A public enterprise oriented platform would see different than a wealth oriented enterprise, and both have their own mandate and capabilities to do what they have to do. So that is what I would say, that cross-border bill payment, all of it is then just a line item and a note of Sasa Re Re Gaga Mama, to whom you are playing opera, you are doing, and how you are singing to which gallery, what price do you command and want. So I will leave it at that, and there is much more I would like to hear from my other learned friends here.
Thanks, Anand, so much for an interesting take. Thank you. May I now invite Pratyush from ThinkPay. Pratyush, any thoughts, any views from your side, given the role that you guys are also playing in driving last mile financial access?
Yeah, Sandeep, definitely. First of all, thanks and good afternoon, everyone. Sandeep, what I feel for the next this thing, there are three areas which I identify that can leapfrog the growth. Okay, though the last few years we see the growth has been phenomenal, and three areas which I think that needs to be focused for, again, that you mentioned, like 15x, 20x growth for the next this thing. One is, I feel, on a small ticket size payments. Okay, those small ticket size payments currently are still done in cash mostly, and those who are done digital, most of them are in influence of cashbacks or any other offers, which tomorrow might stop coming in. So these needs to be addressed as a first part, that how we can make it even more frictionless with, say, maybe a variable tech, or a simple tap, or like sir mentioned initially, like a handshake or something like that, because it should be as equivalent as a cash payment is done. So that's the first thing I feel, that that can actually make us grow multifold. Second area which I see is that the target segment on the rural, semi-rural side areas, because that's still very much unpenetrated. There is enough room for many players in that segment to come in. And the two main challenges which I feel needs to be addressed there is, one is on the visibility side, that how we can improve the visibility for that underserved kind of customer, because the challenge which he faces is the visibility. He has to go to a BC store to check stuff, or he doesn't use a mobile app stuff, or the branch he is not able to access easily to get a hold of his account statements, etc. So he has paid an LIC premium, but he doesn't know that has it really been credited into my LIC account or no. So, and suddenly after a few years he might receive a surprise. So I think the two major challenges: one is visibility, and second is access, or simplicity with security. Because though we are trying to go simple on payment, but with being it simple, it has to be secure in a way, because these people trying to make it simple and secure, they are two different things, and both has to be taken together, because otherwise lot of they get uh, like exposed to a lot of frauds and other activities. So I think on the second use case for this segment, these are the two things which needs to be focused on, which we are working on. And third, like Weber sir said, use case based. So there are a lot of use cases apart from, like Weber sir mentioned. I think few of them are like the APMC Mandi transactions, and your SHG groups, MFI collections, etc., which we are targeting, and how we can merge, create a customized solutions for these use cases, so that apart from like accounting, etc., which other panelists mentioned, I think these are the three areas which can bring in the next set of growth, in my view. Yeah, Sandeep, you are on mute.
Thanks, Pratyush. Yeah, so thanks so much, and I'll come back to you a bit later, Pratyush, more on when you talk about the last mile payments and data and security. But let me just go to the other panel members also first, and get their views as well. So let me come to Madhu, and then I also see Praveen is also here, Delwal. So I'll take his views towards the end from the broader merchant category. Madhu, you want to go first, and then I'll ask.
Sure. Thank you, Sandeep. Thank you for having me on the show, and a lot of friends on the panel. Very glad to see some of them. And I think between Vaibhav and Anand, they practically covered most of the aspects. And I think based on our own experience of having worked with banks over the last 6-7 years, and enabling some of the fintech opportunities that have come about in the market. What I can sort of allude to and to sort of complement the points that Anand and specifically Vaibhav made is that today we are at a point in time where we are okay to run businesses where there is no money on the table, right? In the sense, payments has become a loss leader. You don't make money, so necessity has become the mother of innovation. We have been forced into thinking, how do we make this work, right? I think for the longest period of time, inclusion has been seen as a cost center. So I think what events that have unfolded in the last couple of years around UPI and how that product has sort of gone about reaching practically every nook and corner of the country and potentially going all over the world is the fact that at one level, if there is intent from the ecosystem to enable something and the product works, the customers will lap it up, right? We didn't spend even a tenth of what banks spend on activation offers for debit card or credit card on UPI, but adoption happened because people used it once or twice. In my own experience, my mother leapfrogged. She never used debit card, but she uses UPI 3 or 4 times in a week, right? So I think there is that adoption that's happening, which is heartwarming. We have to, all of us as ecosystem sort of players, have to sort of take on that mantle to figure out new ways to wherever between that A to Z that money is, like to Anand's point, and really use the infrastructure that's already been built, and it's no longer about doing pilots. These are all scale platforms. We are talking about being the largest market for digital payments on a daily basis. So I think it's now the moment in time where we have to really look at how do we get to that 7.5 lakh villages and get customers out of the cash cycle, right? The biggest challenge that never gets addressed is that people are caught in a cash cycle. I earn money, income in my payroll or daily wages in cash, and I have no need to convert that to digital paying money, right? Paying fees or paying charges, and therefore that's where customer drop off happens, right? So if there are, and we work with a number of partners, for example, vertical financing companies who are actually saying, if we can digitize the entire value chain, there is value for everybody in the ecosystem to sort of adopt. So I think there is a lot of focus that and impetus that has to come from policymakers also to enable some of these players who will, who over the next 5-7 years, it's not a 1 year or a 2 year journey, it's probably a decade journey to arrive to a point where we are able to make meaningful impact, right? Bank accounts, for example, it was an inclusion agenda 10-15 years back. RBI used to, I think probably, and pardon my ignorance, they used to give mandates to banks to open bank accounts. Today, we don't speak about it, right? Because it has taken us 15 years to get to a point where there are 700 million accounts and things like that. Likewise, I think the next wave of innovation and trust should come from policymakers to see how these accounts can get activated, how we can create a meaningful, viable sort of business models around it. Payments is not the answer. I think we will try and innovate. We have done practically as a country, we have done every form of innovation. We have products for USSD only, which is scaled. We have products for biometrics only, it is scaled. So we have scaled platforms in silos. Now it is our imagination to see how we can kind of bring it all together to make sure that we are able to deliver to the last mile. That's one aspect that I want to talk about. The other thing from our own experience that we have seen is that India will chart its own path in a number of these products. We are not copying what has worked in the West. In fact, we are way ahead in many of these products compared to the West. For example, for the longest period of time, we have been having BNPL. The kata that you write to your corner store grocery is the first form of BNPL, right? Only now West is realizing that you can buy today, pay later, and all of that. But we have been running it for generations now, right? So therefore, when that when that comes into a business model, we don't need to necessarily look west. We have to just look at how those businesses have been served. The retailer never expected to pay an MDR to serve that customer. He wanted SKUs to move out, right? So the model innovation around BNPL for India will get innovated here. If I'm able to sell a refrigerator, the retailer will actually figure out ways to sell the refrigerator rather than that stock lying in his, in his shop, right? So therefore, we will, while there is a lot of noise around some of these products because it has worked, there are businesses that have raised multi-billion dollars on the back of it. India will chart its own way in some of these products and how innovation can happen. And very, just to quote, one company, I heard somebody, I was in another panel in a market in Indonesia. They said we are the Kata book of this market. So I feel elated. There are, we always say we are the Google of India or Uber of, India. So we are at a point in time where there is, a startup ecosystem that is actually trailing new ground, breaking new ground, and innovating. And we will see the next wave of innovation coming from small towns and built on the back of learnings that are there from the ground.
Yeah, thanks, Madhu. Thanks for the perspective. And yeah, I think point well taken that there is a lot more innovation required, but payments alone may not be able to get or sustain it. I think we need to have some complementary product also from a viability perspective as well.
Right.
But we talked a lot about the last mile retailer payments and solution, and that's still being under penetrated. So let me, I think, bring Mr. Khandelwal's view as well, given all the work that he's done as part of CAIT in driving and encouraging merchants and traders to start accepting payments. So, Mr. Khandelwal, would be great to hear your views on what's the situation on the ground. How are you as part of this initiative driving digital payments adoption? Where do you see opportunities? What are some of the challenges that you still see on the ground? I think it'll be good for us to hear your views right from the last one.
Thank you, Sandeep, and a welcome to all the gentlemen from 8 crore traders of the country, headed by Confederation of All India Traders. And let me express my thanks to CII for holding this discussion on such an important topic, which is going to be a certainty in next future. Well, when we talk about the situation on ground as on date, so we need to understand that the retail landscape of the country is around 8 crore small businesses, which generate around a business of 1,15,000 crores of rupees annually. And mind it, this I'm talking official figures. We have a large informal economy also running parallel to this system. And I think payment can be the solution through which we can convert informal economy to formal economy. And getting them lending through banks and financial institutions is another area. So we have worked with MasterCard since last 5 years, and we could able to adopt to make about 35% of traders who have accepted digital payment as a solution. So, but still the numbers are too large, and of course, the one most important thing what Madhu was also saying, the MDR charges. During this competition age, the traders at the retailers end don't have more than 5, 6, 7% margin at the retailers end, and partnering a percentage of 1% to 2% is something which is not acceptable by the trading community. And
Yeah.
on the other side, if you ask a consumer to pay the MDR charges, then consumer also says, why should I pay? So it's a big bottleneck. What we have suggested to the government that, of course, I have talked to various banks also. Banks also says that why should we give facilities free? And the payment aggregators, they also charge. So one suggestion that could work out, that for initial years, if government subsidize the MDR charges directly to the banks, then of course there can be a big revolution in acceptance of digital payments. And as far as my understanding, Government of India is spending around 35,000 crores of rupees on printing of currency and its security. So in case we enhance the acceptance of digital payments, then of course government will not have to put from its own pocket the portion which government would be saving from printing of currency. But of course it will take some 2-3 years. So this is one very important point which I want to place from the point of view of traders. Then the second issue is that more than banks, the non-banking finance companies and MFIs are lending to the traders. And unfortunately, they have not been provided the facility of issuing cards. So if those NBFCs and MFIs, because of their credentials, if they may also be allowed to generate the card system, then this adoption of digital payment will go a long way. And the third very important point is still the tier 2 and tier 3 cities or tier 4 cities are totally blank at this point of time. So we see lot more opportunity in tier 2 and tier 3 cities where we can push the adoption of digital payment. Then of course one more suggestion what is hovering my mind is easy boarding for the traders, but while building a great general awareness across the country. Still, most of the traders do not aware the kind of digital solutions available for the payment. So there has to be a general awareness campaign. And the one most important thing is the distrust. Still, traders feel that if we negotiate the payment through digital system, our our account can be hacked or something like that. So we have to build a trust among the traders with AI-based solutions to ensure that your accounts are not going to be cyber hacked and all that. And also we need to explore technologies and initiate actions that can recast and simplify the cross-border payment space. It's a big area. Cross-border space is a big area. We need to understand its importance, and therefore government has to bring some kind of some kind of policy initiatives to build this space. And of course there has to be a credit solutions for supply chain, which is not available right at the moment. So therefore, if we really want to expedite the digital payment acceptance and adoption, then it would have been to make it easy and a cost effective affair for the traders as well as for the consumers also. Now days have gone when traders were supposed to doing some other kinds of businesses. The business scenario is being changed drastically, and we are telling them to adopt, to upgrade, modernize and computerize their existing system, integrated with logistic systems and digital payments, which is the very small, which don't require much efforts. So my final comment will be that we need to have a very holistic approach. And if we are able to bring these almost 5 crore traders on board, then by default we'll be having the consumers also on board. This is all my suggestions.
Sure. Thanks, Mr. Khandelwal. And I think good to get that perspective, right? I mean, obviously, MDR is an issue that I think all the stakeholders are aware and cognizant, and there have been steps taken. But I'm sure there are a lot more steps that need to be taken to make one payments as a model viable for the stakeholders, at the same time acceptable to the merchant community and the consumers, right? But also one interesting point also you brought in about was, and which is where I would want to get inputs from rest of the panelists, is on the entire data security part, right? With the pandemic coming in, there have been a lot of instances of frauds getting higher because a lot of people now are doing remote payments. A lot of them are first-time users of digital payments. There have been instances of even UPI, which we thought is safer, but there are fake links coming in and sort of getting paid. People are ending up losing money from their accounts. So just want to get a view from the panelists here, from the fintech players as well as from banks. How are you addressing this problem around data security? And there is obviously one aspect around creating better financial awareness and educating customers. But and any thoughts from your side on how has the incidence grown in the last few months of the pandemic, and how are you tackling it?
Banker would like to go first.
Sandeep. So let me take that question. And see, what has happened is, since the pandemic and rather than the pandemic, with the advent of, so many digital use cases and, people becoming digital, which, increased a lot after demon. And since then, a lot of this, elements have started, trying to do frauds. Okay. Now, when it comes to security, nothing works as good as consumer awareness, and that is what, banks are trying to address today. Okay, so consumer awareness is the first and foremost important thing, because majority of the frauds that are happening in the industry are because of lack of consumer awareness. So some of the points where we try to make the consumer aware are, be aware that the bank is never going to ask you for your credit card number, debit card number, your expiry, your PIN number, your OTP, or your CVV. Okay, this is first and foremost communication that has become like mandatory across all mediums. It's a omnichannel communication that is hammered again and again by the banks, whether it's voice, whether it's branch, whether it's email, whether it's bot, SMS, what's social media, etc. Other than that, what we also tell consumers is they need to keep on regularly checking their statements. We tell them to verify the receipts once a payment is done. We tell them to keep a dedicated payment method when it comes to online transactions, and be very of QRs when they are scanning the QR code. It is extremely important. From a bank's perspective, there are a lot of technologies that we have tried to adopt. SSL encryption being the foremost technology. So wherever it's a website or a payment page or an app, SSL protocol is the first and the foremost level of security. Second is PCI DSS, that comprises of 12 data security requirements. So PCI DSS is extremely important. Third is tokenization. Tokenization is more from a security as well as a flexibility perspective, which actually helps authenticate the consumer during the purchase without affecting the security of the transaction. Another thing that we do is 3D secure authentication, which has been there for the longest time. So, 3 domains: bank, processor, and the issuer. Then we implement extensive fraud risk management framework, Sandeep. This fraud risk management framework is very important because it keeps, every transaction check and balance in place. Okay, every time a particular transaction takes place, every time, from an account or from a non-account user, when the transaction is getting processed, at that time the transaction passes through this FRM framework, and then whatever are the parameters, whatever are the algorithms that are put in, the transaction passes through those algorithms, and then basis that the transaction gets processed. Of course, then there are things like second factor authentication, there are things like application security testing for vulnerability detection, and then there are trusted apps, as well. So there are a lot of these things that banks have been doing on the security aspects. But again, I come back to my first point, first and foremost being the consumer awareness, because that is where, the breach starts, and that is where it has to be plugged in.
Well, can I take a dig at it? This is all Nariel. Yeah, let me not complete the phrase. All of it, but still it does not work. What ultimately drives is no amount of technology can surpass human greed, or they say stupidity. So all this 3D secure and SSL, etc., are important, which is our dharma as banker and provider, online payment gateway, what Madhu would do on his platform, or we will do. What is important is the what India drove on, why the UPI growth came on, was not on customer education. It drove purely on UX. It was convenient to use, and second, it was augmented with greed, with the cashback. The entire 110 million user base that you see is digital savvy greedy segment, DSG as I call it. And so digitized, marginalized, and subsidized. Yeah, the marginalized subsidized segment remains big, and the digitized, the DSG segment remains, they thrive, offer to offer, discount to discount, platform to platform. Long live few of them which have already succumbed to the burnout. Yeah, so UX very important. Greed worked. Greed and fear works in human race. Ayn Rand wrote in one of the books, novel I don't remember, but the time for fear is triggering in with the round of greed done its own damage, and the trust breach that has happened. For us, what we believe at Nearby Technologies is that the trusted retail partner, assisted service driving the consumer to digital savviness is one step at a time. And it is fine actually, because the way you choose your retail partners, how you train them, how you enable the user experience, and ensure that there is a balance between the security controls and user experience. So, yeah, you're saying something, Pratyush? Right. Yeah, so that's about it. I see Avishant Pant also here. I would like to hear him as well sooner. But yeah, so no education can surpass the technology work that we do. And the trusted partner ecosystem is important to meet rubber to the road and not have fraud. Madhu, over to you.
Yeah, I mean, just to add to what Anand said, I think the thief is always smarter than the cops. So the cops have to just catch up all the time. I think in some ways, the risk management practices at digital payments is exactly that. Today you place an ad on OLX or any of these online platforms. In 5 minutes, you're going to get like 3 calls. Practically 4 to 3 hours. Prashant, I think you have to mute. Bit of feedback coming from there. Sorry.
Sorry, I think Abhishek, if you can go on mute.
अभी तो रुक जाओ रास्ते में जाते हो तुम्हारा नेटवर्क कहाँ है कौन सा है
Abhishek, sorry, can you go on mute, Abhishek, please? Yeah.
Yeah, sorry. So I think therefore it's imperative that some of these, as new products come in, exactly what Vaibhav said, is awareness that is required. It is not an either or. We need to create awareness. We need to ensure that some of these products are done in a sort of measured manner, right? So the perfect not becoming an enemy of good. So the whole, new products when they start hitting scale, greed is inevitable. To Anand's point, if there is cashback, people will try to do it, but you just have to create that awareness to ensure that not all of that that looks good is actually good. So yeah, I'll probably pause there.
Thanks so much. Mr. Ubade, Pratyush, any points of view from your side?
I think the other panelists covered it well. One point which I would want to cover apart from this, like in terms of the data breaches which are in the news with quite a few companies. So I think in that few steps, what we are taking, like apart from getting our certifications and everything done, is that storing whatever is required data, the minimal data with us, and which is not required, we are trying that we don't store it, or we take it completely segregated, so that in terms of data breaches, there is not enough data like any dormant customers, etc. So we are all moving it to other servers just to safeguard ourselves and safeguard the amount if it gets breached in future. So a few things we are doing on the data breach side apart from the certifications and all. Yeah.
Sure, and some of them are also driven by the regulator. I think we've seen recent regulation on payment aggregation also, where RBI is preventing the aggregators from storing. So, and some of them will also affect customer experience. And I think there's always a ask between.
May I come in?
Yeah, Mr. Ubade, sorry. Yeah, please.
So I was hearing to Anand and Madhu. Now, what is happening is in banks, particularly big banks like a big bank like our State Bank of India, even though the customer might have shared some sensitive data, which has triggered the fraud, the regulator is of the view that okay, customer has done a mistake, we accept. But then, what are the systems that you have in place that, despite customer doing such kind of mistakes, you can prevent frauds? That is where the challenge comes. So a few things that had been introduced recently, particularly in our mobile banking flagship product YONO and YONO Lite, we have introduced SIM binding, so that you can use the product only on that mobile, which has got a SIM of the registered mobile number, which is with the bank. So even if some other fraudster download the app and take from you your user ID, password, or whatever it is, the product won't work. So we hope that this will bring down those type of frauds where the customers were clicking on some unknown link and then were directed towards a web page which looks similar to our internet banking or something like that. And those kind of frauds. Another thing that has been that is in pipeline is velocity checks. For example, 3 or more merchant payments in customer account within 10 minutes for more than rupees 50,000, the account will be blocked till the customer comes back and tell bank that it was a genuine transaction and was not something he was not doing or she was not doing. Or say 3 or more fund transfers within 10 minutes of 25,000 and above, the account will be blocked immediately. Intrabank transfer, same thing. IMPS transactions of rupees 50,000 cumulative done in customer account within 15 minutes. Anytime during the day, the account will be blocked. Similar thing has been brought in for geolocation. If you access your online banking from one location and within 10 minutes you are found accessing it from a distance of say 25 kilometers or 50 kilometers from where you were, the system will not allow that transaction to go through. So what I wanted to tell here is that as the technology grows, and it is going to grow, nobody can stop it. As I mentioned in my opening remarks, how do we ensure that we offer something which is safe and takes care not only of the consumer but also of the service provider, the concerns of service provider and the concerns of the consumer as such. So these are few things which have been initiated, and going forward we will have more analytical usage for arriving at how the fraudsters are working, what kind of tricks they are bringing in, and then what kind of checks we can build around it. But there's something like a cat and mouse game. Means as we go ahead, these things are bound to be there. And how do we keep protecting ourselves from all these things is something which will be very interesting to see as how the IT guys are going to offer a solution for this. Thank you.
I think these are great examples, Sublan, and I think these are some of the measures that are required, right? Considering, I think SBI being the largest bank in the country and your customers driving most of the transactions. I think some of these things, while we can talk about customer awareness, and I think what Vibhor rightly pointed out, that a lot of things have to be invested in, but I think from a system perspective also at times, even these might look at irritants to some of the customers. But I think if you look at the broader consumer base that we have and the vulnerability that they have against this fraud, I think some of these things might at least help prevent certain aspect of frauds. But and at the same time, I think as you rightly said, right, it's a never-ending game. It's a cat and mouse. You put in some checks, and they'll try and find some other loopholes, and it's always catch up that we'll have to do as key players in the ecosystem. I think we are towards the end of the session. What I'll see is if there are any questions from the audience, if they have any perspectives to share or any questions for any of the panel members. Deepak, any questions you have? Is there a provision to get the questions from the audience?
Yes, we have this provision, but as of now, I have not received any question on CI5. So if anybody is interested, we can
yeah. May I please?
Yeah, Mr. Murali.
What I want to suggest here is that for public sector bank employees, there need to be regular workshops by NPCI and CI on how does the digital payment ecosystem works, and as an employee of the bank, what kind of measures they need to take to ensure that they do the entire thing, or they transact the entire thing, or the service that they offer is offered in a secured manner, and they don't expose themselves or the customer or the bank while offering these services. Because many things which are very technical in nature, UPI is driving it, NPCI is driving it, RBI is driving it. But then at the end of the day, it is the person who is sitting in the branch who perhaps is not so technology savvy, but just because of the compulsion of his profession, he is made to do certain things. But then that knowledge dissemination is not happening. So how do we address this thing? How do we have more workshops? How do we reach the last mile service provider of the bank branches so that he or she is aware of what this is all about? And how do I carefully handle this kind of business, which is different from the traditional things that over the years these people have been doing. Thank you.
Sure, no, absolutely fair points. And I think as we evolve and progresses, I think there's a lot more investment required in our teams as well, right? We want our employees to be up to the mark when it comes to digital innovation, so that they in turn are able to guide the customers as well. I think there's a lot more investment required in our people. Mr. Khandelwal, you had some point to make.
Sandeep, I have one question for my banker friends, and please don't take it otherwise. I have not seen any bank in the country because I travel a lot. Still, I am in Bangalore. So I have not seen any bank in the country aggressively taking the acceptance of digital payment among the traders. Because traders are the largest base of the country, and no bank, whether it is SBI or any other bank, they have not taken any initiative to make the customers aware, particularly the trader customers, that please go for digital payments. And as far as Bharat QR is concerned, no bank has ever given a choice to the consumer that why don't you accept a Bharat QR? So this is a question which is just came to my mind, because my banker friends are here. If they are able to answer it, it is good.
I will respond to it. Mr. Khandelwal, at the outset, let me admit that what you are saying is right. There is one area that need to be looked into. So at State Bank of India, we have recently launched our app by name YONO Business, which is purely for SME and MSME customers, wherein there are all transactions they can do on the portal. And there are some journeys which start on the mobile app, and then the remaining part can be done in the branch. So this is one untapped potential which we have now entered into, and I'm very sure that once SBI enters into something, it will be something going to be translated into something very big. So please give us some more time. Maybe in next few months, you will see that at least from State Bank of India, there will be definitely a very deep penetration as far as offering digital services to traders community is concerned.
Sandeep, can I put a supplementary suggestion?
Yes, please.
Mr. Sandeep, I do appreciate that you are very frank, but I have a suggestion. We have more than 40,000 trade associations and federations across country as our member, and this whole ecosystem represents around 8 crore traders in the country. Why don't bank join hands with the trade associations for the scheme which you have just told me? It is a news for me. Nobody knows. So unless and until we take a awareness campaign, and our trade associations, I can guarantee for that, they will be true friend for taking this initiative down the line. So if banks or the financial institutions or the institutes join hands with the market association, then of course we will be able to generate more and more voluminous adoption and acceptance of digital payment.
Point well taken, Mr. Khandelwal. Definitely, it's a very good suggestion. But as I told you, we are only in our initial taking some baby steps in this area. And point well taken. We'll definitely get back to you.
Thank you.
Together we can definitely do a very good work.
Thank you.
And we should thank CII for enabling this platform here today, so we could get Mr. Khandelwal connected with SBI on this initiative. I think that hopefully should.
I must also take a minute to compliment Mr. Khandelwal for the Bharat market platform that he has visualized and seeded it. So we were partner to him to do some work in the early days, and it's a fabulous mindset to enable the retailer Shashaktikaran that he and Bhartiya ji is driving from the platform. Compliments to you, Praveen ji.
Thank you, Anand. And certainly we need the cooperation of each and everybody who are present here. And it is going to be a 100% Indian e-commerce platform, which will definitely change the landscape of e-commerce. Thank you very much, Anand.
Thank you.
Right, and we are on top of the hour with that. So from on behalf of CII, I would like to thank each and every panel member for sharing your views and giving a diverse perspective, right? We had views from the bankers, we had the views from fintech players, and we obviously had the view from the trader side as well. I think it was a good, healthy discussion with good perspective. I'm hoping the audience also enjoyed this conversation. I certainly did. Thank you so much.
Thank
you.
Thank you.
Thank you,
Sandeep.
Thank you, Sandeep.
Thank you, everyone.
Our sincere thanks to all the dignitaries for taking out time from your busy schedule and sharing your valuable thoughts and knowledge with the participants. I'm quite sure that the participants will take maximum benefit from your views. Now we will move to the next panel discussion. Please join me in welcoming the moderator of the next panel discussion, Central Bank, Ms. Shweta Shetty. The panel discussion is on Central Bank Digital Currency, Hyper Harbinger of a Cashless India. I would request Ms. Shetty to introduce the panel and begin the panel discussion. Over to you.
Sure. Thanks, Priya. And some very interesting thoughts on innovation in the payments ecosystem in the previous panel. Good afternoon, everyone, and thanks for joining in. I am Shweta Shetty, and I am a financial services partner at Deloitte India. And I have the pleasure of hosting a very, very interesting topic today, central bank digital currencies, or popularly known as CBDCs, Hyper Harbinger of a Cashless India. We have an absolutely distinguished panel today with me, and I'm really looking forward to a very engaging and thought-provoking discussion. Our first panelist with us today is Mr. Sameer Shetty. Sameer heads digital business and transformation at Axis Bank. Prior to joining the bank, he was a partner at McKinsey in the financial services practice in Mumbai and the leader of the digital and analytics practice for financial services. Sameer holds an MBA from IIM Bangalore and is an aerospace engineer from IIT Bombay. Our next panelist is Mr. Rana Durjay Talukdar. Mr. Rana heads the consulting and analytics business in Visa for India and South Asia, driving payment strategy and implementation for banks, merchants, and fintechs. He brings 17 years of consulting and banking experience across EY, PwC, and banks in India, Middle East, and Singapore. He has an MBA from IIM Lucknow and has studied economics at Presidency College, Kolkata. We have with us Mr. Ravi Rajgopalan, who is the founder, CEO of M-Base Payment Systems, the only fintech to clear and settle directly with the RBI. He founded the company after a long stint in telecommunications with Stratus, Ascent, Lucent Technologies, and Alcatel in Europe, Far East, China, and India. He is of the Indian Institute of Management, Ahmedabad. Our next panelist is Mr. Abhishant Pant, known as the Cashless Man of India. Mr. Abhishant Pant is ranked among the top 100 fintech professionals in Asia. He has worked in leadership positions with Visa, M-Pesa, Yes Bank, HSBC, and ICICI. More than 50 media houses globally have covered Mr. Pant's work, including documentaries by BBC. We have with us Mr. Mohit Gopal, Senior VP at PayU. Mohit has a deep understanding of the payments and fintech ecosystem in India. At PayU, he oversees strategic partnerships and manages multiple businesses, including omni-channel solutions, SMB bill payments, and the government vertical. His expertise in scaling businesses and diversifying the payments product suite comes second to trying the speed of trying to accelerate digitization of fintech in India. Mohit holds an MBA from IIM Ahmedabad and a master's degree in law from the National Law School, Bangalore. A warm welcome to each one of you, and thank you for joining me today. Before I hear from the panelists, I would like to quickly introduce the topic and maybe set the context. To quote Mr. Ravi Shankar, Deputy Governor, Reserve Bank of India, a CBDC is the legal tender issued by a central bank in a digital form. It is the same as the fiat currency and is exchangeable one-on-one with the fiat currency. Only its form is different, and that's the beauty. CBDCs have many characteristics of a private virtual currency, that is the cryptocurrency, if you were to name it, but there would be a very high degree of centralization, allowing the central banks to keep control over money flows and safeguard the ability to enforce a monetary policy in line with their objectives. One major advantage that CBDCs will have over other digital payment systems is that it reduces settlement risk almost to zero. And this will have a huge impact on global trade and payments, and even facilitate immediate settlement for stock exchanges. Now, while CBDC in general has been receiving a lot of interest, very few countries have really reached even the pilot stage of launching their CBDCs. To quote a 2021 BIS survey of central banks, it was found that only 86% of the jurisdictions are actively researching the potential for CBDCs. 60% were experimenting with the technology, and 14% were deploying pilot projects. RBI has indicated that it is conducting a feasibility study on the development of a government-backed digital currency, and most of you would have seen or read the speech. As spelled out by the Reserve Bank itself, some of its interest has been indigenous in nature for meeting policy requirements. However, India having a very high currency to GDP ratio, CBDCs could very, very well help in reducing the cost of printing, transporting, storing, and distributing currency. Now, there has been an impressive growth in the number and value of cryptocurrencies due to their decentralized and regulation-free mechanism. However, there has been volatility, unpredictability, and speculations. And with this in mind, CBDCs have been explored as they promise faster, cheaper, and most efficient payments, both domestically and cross-border, and are arguably more safe, secure, and have lower risk of frauds. Now, there is an argument that retail CBDCs might not necessarily be required in a country that has a strong payment system, and CBDCs, could be debated from a retail perspective, but in general, CBDCs could play a significant role in India's financial inclusion. CBDCs can provide an alternate to cash while solving existing challenges in the unbanked and underbanked population of India. Now, whether we adopt the retail or the wholesale model for CBDC, it has several benefits for India, and that's undeniable. However, a thorough analysis of the cost of development of infrastructure, deployment and maintenance costs, software licensing costs, the risks of data privacy, ML, and cybersecurity will be critical in implementing CBDC. So on this note, let me begin by getting the thoughts of my eminent panelists here with me today on how do you think CBDCs will contribute to payments innovation beyond the pandemic? Will this be a game changer for India? Samir, if I can start with you. Samir.
Thank you, Shweta, and thank you. Yes, can you hear me? I hope.
Yes, we can hear you.
So thank you, Shweta, and thanks for inviting me, and welcome to all the panelists and everybody on the in the audience as well. Look, I mean, when I got the invite for this session and when you asked this question, I was scratching my head a little bit because honestly, at this point in time, we don't even know what a CBDC looks like and what it will do. And there are multiple forms being debated and multiple modes of business models and operating models being debated. So could CBDC be a game changer? 100%. It can absolutely be a game changer because, as you said, it replaces your rupee note today with something which is digital. It takes off lots of transaction costs. It does very many things to inclusion and so on and so forth. So it could potentially be a game changer. Honestly, at this point in time, it's very difficult to say which direction it will take. In my mind, there are two directions it can take. One direction is that it is kind of adopted, and it is adopted in a way that it genuinely has the potential to reshape the financial system, which means that there are some fairly fundamental operating model shifts that happen, right? In the sense of what is the role of banks, what is the role of payment systems, etc., all get changed. And then, we could see a very different financial services system, maybe 10 years down the line. The second zone it can go is that it becomes a fairly confused, complicated kind of an animal, which then there is a lot of hype around, but then, never sees the reality of life. So I think both modes are very much possible. But yes, if implemented in the right way, it could be fairly fundamental to how financial services works in India. You're on mute, Shweta.
Sorry about that. Ravi, if I can get your views.
Me? Yeah, hi. So thank you, Shweta. Can you hear me?
Yes, we can.
Right. So thank you so much for inviting me to this panel, and my greetings to all my distinguished fellow panelists, some of whom are old friends and some, the rest of you hopefully will become new friends. Hey, Samir, how are you? There is an adage that, to anyone who has a hammer, every problem looks like a nail. Yeah, we're in danger of trying to get too clever with pieces of technology that are appealing. Make no mistake. I think the CBDC is a tool that will come into being for two very, very good reasons. The spread of cryptocurrencies, and by the way, a CBDC is not a cryptocurrency. The spread of cryptocurrencies and their derivative, which is basically the stable coin, something that mimics, which is like a US dollar traded in token form, can threaten the stability of the financial system. There are already all sorts of implications of cryptocurrencies being used for illegal applications. As we know, the dark web is almost entirely financed by Bitcoin and other forms of cryptocurrency, right? So I think that's one part of it. The second thing is when these private networks proliferate, it threatens the stability of the financial system. Therefore, what regulators will do is to try and get ahead of it rather than get behind the curve. And the RBI is no different in its objectives in that regard. The specific objective that the Chinese are doing the CBDC for is to ensure that in a future reasonably warm war with the United States, they are not put at risk for settling the huge dollar trades like how Iran has been. You know, the United States refuses to settle dollar trades, you're stuffed. You know, your access to international trade is finished. So the Chinese objective, which they will basically showcase in the 2022 Winter Games in China, is essentially a CBDC that eliminates any settlement risk and ensures that, you know, the big Chinese dependence on the US dollar to settle trades between its supplier countries and exporting countries is to some extent mitigated. Today, they run a huge risk of that happening. In India, we have to give credit to the Reserve Bank of India for, you know, something that they have done over the last 10 years, which is remarkable. I think India's financial inclusion problem has been so well mitigated over the last 10 years, it is worth a story in itself. You know, there is a identity structure of the Aadhaar, there is a universal payments interface, which is UPI, and then the banks are, you know, basically under the cost from the regulator, if I may use that word, Samir, with your permission, to make sure that access to the system is ubiquitous and free for all customers. So to that extent, you know, we have solved the problem. The issue in India is not one of financial inclusion or the intellectual firepower to solve it. The issue is digital literacy. And a CBDC is a digital product, an uber digital product. So the applicability of it to India is a question of its a question of how quickly the average Indian consumer adapts to its requirements. Just to close off, as Avishant and other people in the financial inclusion space who know more about this than me will attest, the use of digital payments in India falls off a cliff when you step outside the metros and the conurbations. The reason that we still have 22 lakh crores or whatever it is of cash in circulation today was vis-a-vis 17.48 lakh crores in November 2016 attests to the fact that cash is very much king, and it is not because there is no benevolent regulator or financial system or tools to ensure that digital payments can expand. So I leave it here and let my fellow participants to respond.
Sure, thanks for that, Mr. Ranadurjai. Can I come to you?
Sure, Shweta. My opening remarks about CBDC, is that what?
Yes.
Yes. Am I clearly audible? Okay, sure.
Yes, you are.
Thanks. Firstly, hi everyone. Good afternoon to all my fellow panelists, and thank you CII for inviting me to this very interesting session. So I believe, well, when I talk about the CBDC, I look at it from the point of view of Visa, the company I work for, and of course there is an individual point of view that I also have. But I'll probably broadly talk about where we see in Visa as the world's largest payment network of how CBDC is expected to play out. Firstly, when we look at the existing digital payment methods, and I think Ravi and Sami spoke about that initially, the big question is that do we really need another payment method called CBDC, given that we already have a proliferation of digital payment methods, and the core problem seems to be digital literacy, financial literacy, acceptance, which I would say is a problem as big as digital financial literacy in terms of really pushing digital payments across the length and breadth of the country. Having said that, we believe that that CBDCs will actually complement rather than replace the existing payment infrastructure. We believe that CBDC will lead to a two-tier sort of monetary system architecture. Instead of being banks, instead of being disintermediated, they'll actually play an important role in providing access and utility to drive payment behavior using CBDC as a new form factor. If you look back at the history of CBDC, right, the very brief history of CBDC, so to speak, initially for both the, so there are broadly three approaches, right? There is this retail approach for retail peer-to-peer and sort of P2P and P2M payments. There is the wholesale approach of CBDC, which you alluded to in the beginning of the session, and there's a hybrid approach where we have some elements of both retail and wholesale. Now, across all of these approaches, right, the initial view at one point was that consumers would actually directly open accounts with central bank. The central bank would mint the CBDC token and credit consumer accounts. That has been junked, which I think is a very positive move, because direct access to central bank is very difficult to implement, right? The second element is that existing ecosystem participants.
Ravi had also spoken about the high usage of cash, and I think you'd also spoken about it. We've got about 14.7% of cash to GDP ratio right now in the country, right? And that's been increasing. It's not actually been going down, and in spite of the growth of digital payment systems. So I think from that perspective, definitely, when this technology evolves and is actually used by a large percentage of the population, that will have impact. But I would just want to talk about timelines. We all know that a lot of people, 81, 83 countries are right now out there with it. But even the first country, which was Bahamas with their sand dollar, only launched about this year, really, for all practical purposes. And the Chinese had started off in, I think, 2009 when they started, when they heard about it. 2014 was when they first started, looking at it formally. They gave authorizations internally in about 2017. It's taken them about 4 years to come to a pilot stage. And then I think, as Ravi also mentioned, probably next year in the Winter Olympics, they'll actually launch. So this is a long drawn out process, right? And I think the European Central Bank also recently had said they're going to go that way. And they said it'll take them about 4 to 5 years. So it's not something which is going to happen in a hurry. And there's a lot of work which needs to happen on multiple fronts. And the first and most important is we need to actually change some of the legal frameworks which exist in India, especially with around foreign exchange, etc., etc. So there's a lot of work which needs to happen, which may not even be tech enabled. It is actually just building the ecosystem for this to exist. And I think as a precursor to all of that, earlier this month, the Prime Minister launched e-rupee, which I think had been mentioned in the earlier panel as well. And that is almost, in some ways, it is of course a token-based system, but it's almost like a precursor to a true central bank digital currency, because you will learn a lot about how this works. It's again, here the stated aim, of course, is financial inclusion, especially for benefit transfers and trying to actually solve for that problem. But I think we've got a long way to go. But at the end of the day, I think it's worth doing, because if you don't do it, then a currency is always at threat from other currencies and also other digital currencies. It's almost as if we are living in a world without borders. So therefore, money can flow more easily than ever before. And therefore, for countries like India, it's super important that we do it, but we have to do it right. Otherwise, it will just become another vanity project without actual applicability.
Yeah. Yeah, thank you so much. Prashant, over to you.
You're not audible, Abhishant.
Abhishant, can you hear us? Okay, looks like maybe I'll come back to Abhishant. With some interesting thoughts. Abhishant, are you there? Okay. Some very interesting thoughts. Okay. Please go on. Yes, you are. Yes.
Yeah, sorry. Actually, my flight got preponed, so I had to move out early. So that's why a bit of a network issue, which you may find. So first and foremost, thanks, and good to see a lot of you after a gap. I think it's been a long gap since we have seen each other in that sense. So thanks a lot. And then frankly, my first brush with this happened in 2017 when I went to San Francisco and met with somebody who essentially was building a value chain around CBDC, and they were essentially planning a thought process for that to be deployed in India way back in 2016-17. They came to India, met with the central bank, and at that point of time, frankly, the thought process had not evolved to an extent, and the value chain at our end, from a UPI point of view, was still evolving. So therefore, it took a lot of time to bring appreciation of the subject itself. I think at this point of time, as my previous speakers have covered, there is a significant movement from a appreciation of the subject has happened. However, still, I believe from an India market point of view, the journey that we have covered in terms of UPI being the driver of cashless ecosystem at a larger level, of course, tracking of transaction, while it may remain a concern, from the last mile outreach point of view, and if inclusion is one of the agenda that we intend to drive, then I believe that last mile outreach has been addressed to a great extent. In last 6 odd months, I have traveled if not more. I would have traveled anywhere between 9 to 10,000 kilometers of this country. Yes, I was fool enough to travel during COVID times as well. Have traveled to different parts of the country, and in that process, went and saw remote villages in Himachal, went down south in Kochi and other places. Frankly, the level of acceptance which I have seen in this year, I had not seen ever in last 3 odd years. And as some of you know, we cover 11,000 kilometers of this country every single year. At that, in instances I have seen in Himachal wherein people are using UPI without having internet connectivity at the last mile level. They arrange connectivity, they arrange hotspot connections and allow their customers to pay for it. And all of that without ever a Bharat Pay, a Phone Pay, or anyone else reaching out to them from an acceptance ecosystem point of view. So frankly, if inclusion is one of the agenda which we intend to drive from the point of view of CBDC, I believe that that might not be the best case scenario, because a lot of inclusion is getting achieved without having the framework from a CBDC standpoint. CBDC to me, in my mind, will bring basically transparency to the ecosystem, will help in getting a view of being able to track the transactions, trace the beneficiaries, and trace the end usage of that. From a inclusion and from a payments transaction standpoint, or essentially digital footprints of customers, I think we are achieving that from a UPI standpoint. And anyone who essentially is going to look at CBDC will have to essentially look at it in the UPI framework or a construct point of view of real-time settlement, and essentially being able to settle the transaction, plus as well as make the value available to the customer then and there. I think that piece is already getting achieved. I don't think CBDC is going to add much to that. That's my initial thought on this.
Sure. So interesting points I picked up. So implemented in the right way, regulator will want to get ahead of crypto, can become a Uber digital product. I think extent of participation will determine success. I think these are rethinking their original positions, and Abhishan, to your point, transparency, tracking, and tracing will become eminent. So with this, I'd like to move on to my second question, and again, I'd like to have a brief note from all of you. What are some of the market nuances or considerations that need to be addressed for CBDC to be successful in India? What are those core pillars that you believe needs to be taken care of? So maybe Ravi, if I can start with you.
Yeah, sure. See, like I said, I actually am in violent agreement with Abhishant. This country has had a remarkable record in financial inclusion and in terms of access to digital payments. So the incremental advantage that will be obtained by replacing cash with a token, for instance, is, in my view, I'm very skeptical. See, we all like to say that, cash is bad and cash is terrible and all of that. But the fact is that cash works because of the qualities that, cash has. In order to substitute that with the digital currency issued by the Reserve Bank of India is going to be extremely hard. I mean, since, there is a small story that Mohit related, let me just put this thought experiment before you. And it's a cruel one, but please forgive me for being cruel, okay? So you are an Afghan refugee from the Hazara tribe who's right now at the heading towards the Spin-Boldak border with Pakistan with your wife, your children, and your worldly possessions in a basket. The children need water to drink. And there's a man who's selling smuggled water bottles from Pakistan. You have a CBDC token on your phone, and you have well-thumbed old US $1 notes in your pocket. What do you think the water seller will accept? 9 times out of 10, he will take the US dollar, unless and until the CBDC gets to the same level of acceptance as the basic $1 US note, which today is the currency of choice in many countries, not in India, but in many countries that are suffering from poor governance, right? This is the currency of choice. I think India should get onto the CBDC bandwagon to replace stablecoin, because there are private stablecoin networks that are emerging, particularly in the area of trade. It is not a financial inclusion imperative for India, because we are blessed. In fact, we say we are over blessed with rigorous governance, good governance, with a stable legal system, an educated and stable population, and the disparities that exist in the country don't threaten law and order in India. It is not the case if you look at, say, Congo or even Pakistan next door, for instance. We are blessed. So we should do CBDCs, because we should be looking to replace stablecoin in trade finance, particularly in the B2B sector, and it creates the environment for Indians to innovate. There are already many Indian innovators in the crypto space. This will give them an added fillip to innovate, because these are things that they could, generate export revenues abroad when they actually take these innovations.
Interesting. Can I come to you, Mohit?
Sure. So if I was to think of it, I think another point which is quite interesting is that while, of course, with something like this, the principal advantage I can think from a payments perspective is that since you don't have an underlying bank account, a transfer can actually be a lot more seamless without so many moving pieces, right? But when I think of the principal disadvantage of that, it means that the banking system will also face a threat, because assume that this really works. Everybody is using a CBDC. Then in that case, you may not, you possibly don't need to have any money sitting with an underlying bank account, right? So for the banking system, this is a bit of a system shock. And you combine that with eventually open APIs, which will mean that for existing banks, they will also need to rethink their strategies. And again, it's not going to happen overnight, it's going to happen over a decade. So I'll assume that pretty much every bank will also try to see how they can participate in this ecosystem. But there's a lot of, I think there will be disruption to the banking ecosystem also, assuming that this takes off to the extent which is possible. But it's also likely that there will be certain CBDCs which will actually be preferred in the world for global trade and finance, and most others will be much more local, which will much be more be locally used, and will turn out to be, say, UPI equivalents of some form, right? Which will just make it easier for you to transfer money locally rather than anything else.
Got it. So maybe I'll come to the banker. Samir, what are your views on what are the fundamentals that are required for CBDC to be successful?
Thanks, Shweta. So, I mean, before I come to your question, I think I have a slightly different point of view compared to many of my co-panelists, which is, see, if you think of CBDC, see, there are aspirin solutions in the world and there are vitamin solutions in the world, right? Aspirin is you have a headache and you take an aspirin, so you have a problem and you are trying to solve that problem. And there are vitamin solutions wherein actually you don't have any problem. It's not that your head is aching and hence you need vitamins. You need vitamins so that you can be healthier tomorrow, day after, and so on and so forth. In my mind, CBDC is a vitamin solution. There is no problem in India, honestly, and I fully agree with Ravi and all other co-panelists that from a payment systems and so on and so forth, we are perhaps the world's most evolved country, and our regulation is great and so on and so forth. But before the iPhone, nobody needed a smartphone, right? Nobody knew that a concept like a smartphone existed. And by the way, the world is completely different today. And I think CBDC will fall in that criteria if we do it well. So that's kind of first meta point, right? Second, I think in the implementation of CBDC, there are some very fundamental issues to consider. The first set of issues are the macro issues. So as an example, if you want CBDC to do international trade, are you okay to open India's capital account? If not, you cannot allow CBDCs for international trade, right? Then you have the same FEMA and so on and so forth, and then you have to go through the same networks. And the issue in using blockchain for international remittances is not technology; it is regulation, because somebody has to take care of the regulation, right? So there are issues of that nature that you have to consider. If you have to kind of, and by the way, CBDCs are introduced so that banks can have monetary policy control. So that I think is not so much of an issue. But there are some of these central issues to consider. Then there are some, I would say, operational issues to consider. So as an example, see the difference between CBDC and currency is that CBDC is traceable, and you need a, like, currency you can take and put it, shove it under your bed or under your mattress. CBDCs will be held in some digital wallet somewhere, right? There has to be some account. The issuer of that account needs to play some regulatory functions. He needs to ensure that the customer is, a kosher customer and it's not a bad customer, as an example. And so in today's world, that role is played by banks. So the only people who can take deposits, or some depositing NBFCs, but mainly banks, right? So the only people who can take deposits and ensure the validity of the end customer and that the transaction is not used for some, wrong purposes is taken by banks. You will need some institutions to do that. It may be banks, it may be some other institutions, but the central bank can't go and do KYC of each customer and can't validate the eligibility, validity and eligibility of every customer. And so you need some institutions to do that. So second is, who are these folks, right? Is the second thing to consider. The third thing to consider is, like what does this, like the Mohit made this point, right? Like what happens to banks? And so is CBDC replacing the bank deposit, or is CBDC replacing the currency? If CBDC replaces the currency, it's fine. Like you can take a CBDC, go and deposit in a bank, right? Because the bank deposit does a few other things for you. It kind of keeps it safe. You get some 4% interest over it. If you put in FD, you will get some higher interest over it, and so on and so forth. Whereas if it is currency, which means it's lying in your wallet, then it's dead money, right? So the question is, what does it do? Does it replace a deposit? If it replaces the deposits, then honestly, banks are in a spot of trouble. And the whole financial system is in a spot of trouble, because where will essentially this cost will move on to the creditor, right? So the interest rates on the loan side will go up, essentially, and maybe banks will absorb a little bit and profitability falls down, but we will see some challenge on the loan side. And then there has to be parallelly some kind of money market which can support credit. Like India as a country needs credit. Our corporates need credit. Our consumers need credit, and that credit has to be supported by some deposits. So somewhere, we'll have to kind of create a money market which can then funnel money into these corporates. So that's another thing that needs to be thought of. The final thing needs to be thought of is what happens to payment systems, and kind of actually the implication of this to payment systems is far more than to banks, because there it's a like bank deposits. I find it difficult to believe that people will keep 10 lakh rupees in CBDC with them in their wallet. They will want to keep maybe 5,000, 10,000, 20,000 rupees. The rest they will typically keep in a place where they can earn some interest and have the liquidity as well. But on the payment system side, if it is a seamless settlement, zero cost, and takes off all the friction and all the other issues, then all the current existing payment systems obviously have a big question mark. But you will need a parallel system, which then, however seamless this is, there will be reconciliation issues. There will be like, I give you the money, but the good didn't come. So now you have to pay me back. There will be issues of those nature. They can't be bilateral. They can't be between you and some merchant. There has to be some institutional way of resolving this, and that's another issue that needs to be thought. So those, in my mind, are the big
Samir, and I will come back to you
You're
on a
again on
follow-up
mute,
question on this. Can you hear me? Okay. So I'll come back to you, Samir. I have a follow-up question for
Yeah,
you.
now you're audible.
Mr. Rana, just following up on what Samir mentioned, so how do CBDCs stack up against digital payments that are already available in the market? You have credit cards, you have physical currency. Do you think CBDCs are going to coexist or disrupt? And how do players like you look at this from a business perspective?
Sure, thanks, Shweta. So firstly, I think, a point that I made in my opening remark, we believe that CBDCs are here to complement rather than replace existing payment infrastructure of any form or kind. Because I think a very critical thing to understand, and I think Samir, I believe, made the point earlier, that CBDC is ultimately going to be issued in lieu of fiat currency, right? The so-called money supply in the economy, right? The M0, M1, M2, etc. That we all learned in economics. a part of that money supply is going to be in the form of CBDC. So fundamentally, at least that's the way it's been approached by China, by Bahamas, or even by Sweden, right? And we expect that to be the largely the method in which central banks will issue CBDC. Um, when it comes to how they're going to coexist, now fundamentally the way CBDC has been envisaged, and of course with time it might change in the course of the next few years, but the way it's been envisaged is that it's a method where in lieu of fiat currency, CBDC is issued. It is passed on to intermediaries. It's then passed on to consumers and merchants, and then they use it to make payments to one another. So you will essentially need all the usual players that you need in today's payment infrastructure, whether you process a credit card or a debit card transaction, or an RTP transaction like UPI, or a private wallet transaction like say Alipay in China, or say Paytm in India, where it's a closed loop system. Uh, except for the closed loop one, where it's something where there's only one player, Paytm or Alipay, where the entire transaction is happening. All the other examples, be it UPI or be it a card payment, will go through is fundamentally an open loop payment, right? It will go through a host of intermediaries. So all of these players, right, be it the fintechs, the consumer tech platforms, the financial institutions on both the issuing and acquiring side, the merchants, networks like Visa, Mastercard, and NPCI, and of course networks all over the world, and consumers. For them, it will fundamentally be no different than the way in which a payment is being made today. Because a payment that was being made today, be it on a credit card or by UPI from a savings or a current account, is one where you are debiting your payment mode and crediting a merchant's payment mode, right? In this case, you're simply burning your CBDC token and crediting the merchant CBDC token. So for the consumer, in fact, and we have actually we are in the process actually of studying the pilot in China, the one that's going on right now in 6 different cities. And from the consumer standpoint, there is absolutely no difference, right? It's just another method, another form factor through which the consumer can make payments. It's very similar to the way Indian consumers made payments via credit and debit card for all these years. Then UPI came in. They found that to be a very convenient single click, sort of payment method, no OTP, nothing, and they gradually, they will very easily took to it. So it's simply another payment method. The real change, if at all any, is going to be, it's actually going to be in the back end, right? Because as far as the front end is concerned, the consumer will look for the same stuff. They will look for excellent, sort of digital UI UX, exactly what they today look for when they use, let's say, their phone pay, app to make a payment. They will look for excellent, obviously, user experience across the journey. They'll expect their settlement to be instantaneous, which it is in the case of CBDC. They would expect a clear chargeback process. They would expect to get rewarded for using CBDC as a method of payment, where the entire reward sort of ecosystem comes in, an area where networks like Visa and Mastercard are also doing a lot of work, through the various types we have right now, with stable coins, like USDC. So they would expect all of these, right? So for them, it's fundamentally not going to change. For the merchant, a big differentiator is instant, credit, instant settlement, something that today doesn't happen in the case of a card payment, where there's a T+1 timeline. So the merchant is going to get paid instantly. There's a strong use case where China is again piloting that, is in areas with very poor network connectivity. You can potentially download the CBDC token onto your mobile and use and make payments using CBDC in an offline mode. I think Abhishan spoke about that in Himachal and elsewhere, where internet connectivity is a problem. You will somehow to find a hotspot somewhere to make the payment ultimately. Otherwise, the UPI transaction will not go through. But CBDC actually opens that up of downloading a token onto your mobile, and it can work on pretty much any mobile, and use that to make a payment. The changes we expect will be significant on the back end, because all the network participants, right, they will have to enable the custody of cryptographic keys, and that's a big enablement. That's a significant tech investment, which is actually going to impact the economics, right, for CBDCs. They actually need to start sort of investing now. They will need to be partnerships with say custodian services, for example. There will need to be sort of whole bunch of digital capabilities different from the existing ones because in the back end, the way it's being processed will be different. And the same will apply to banks, to networks, to any other intermediary, to say, somebody, who is, let's say, a processor of the CBDC payment. So, I mean, to summarize, I think, it's going to have almost no impact on the consumer front. It's another payment mode for them as long as the same value propositions are being addressed. On the regulatory front, it brings significant benefit in the terms of traceability. I think many folks spoke about that in terms of added security. In fact, traceability is one of the reasons why China actually started its ECNY pilot, and interoperability. Because today we are in a situation, although not so much in India, thanks to UPI, but world over, interoperability. I mean, Alipay is the single largest payment mode in China, but it's a closed loop system. So interoperability is going to be another vital piece, right? So that's the benefit that the regulator is going to get. And of course, for all the other players in the ecosystem, quicker settlement and the incremental and the added security, etc. All of that should ideally make it a very attractive proposition.
Yeah, so interesting thought. On that note, saying that the back end is important. Ravi, I'm going to come to you to talk a bit more about, there's when we speak to folks globally, DLT, people say that DLT should be explored for CBDC. How do you think the tech design is going to play out, especially for the Indian regulator? What do you think are some of the key considerations from a tech perspective?
See, DLT is a mistake for a CBDC because a CBDC is not designed to be anonymous by definition. Because we all talked about the fact that traceability is important in a financial system, and if you listen to all the the cryptocurrency propeller heads, they all talk. They're libertarians. They talk about anonymity and why are these institutions there? It's DeFi and stuff like that. So for a central bank, which is preoccupied with financial stability and inclusion, and especially ensuring that the players in the financial ecosystem, don't get disrupted in such a way that they cannot recover, which is important. Disruption is inevitable. A DLT is going to be very hard to enforce. Secondly, my experience, and I could be wrong, is that DLTs are very, very inefficient technically. So if you take a country like India, and even if you take, 50 million people all transacting with each other on a DLT, I can't imagine the computing requirement that is necessary for these 50 million people to transact. I mean, my friend from Visa is here. So we have actually a close partnership with you fellas. So, your IT systems they process something like 17,000 TPS, if I remember right. And those 17,000 TPS didn't get created in a day. It was created incrementally through additions. So this is not going to be possible with a DLT by definition and from the viewpoint of how this actually works. In my view, the design for a cryptocurrency CBDC for India should be designed to solve specific problems. One of them Samir alluded to, which is remittances. It is a needlessly expensive business. So it should be possible to buy a token from someone in England and then transfer the token electronically to someone, and that person can have a choice of banks. It could be Axis, could be HDFC, ICICI, SBI, any of these banks to go and convert that token into cash, because in India is still a cash country, right? And the beauty about the token thing is that it solves for this entire superstructure of KYC, which now has bedeviled almost anything to do with payments. So there are specific applications where we can go with CBDCs, and in those specific cases, the load requirements are small enough for the central bank to basically host it, and without necessarily disintermediating the banks. Unkindly, people say that central banks tend to act as trade union leaders for the banks. It's unkind, but it is true. They are there to protect the interests of the banking system because they're financial intermediaries. So one is this is my view on DLT. Second is that it has to be a centralized central ledger system that the central bank uses. And thirdly, in order to ensure that we don't end up boiling the ocean for 1.3 billion people, it has to be very specific use cases. Trade is one, remittances is another, where DLTs, where these tokens, a token-based system would be fairly ideal to deploy without making the life of any of the participants in the financial system even more harder than it is today.
Thank you, Ravi. Avishant, I'll come to you. Be it payments innovation by the regulator, or if it's open banking, API banking, there has been a role for fintechs. Where do you see, the role for fintechs in CBDC? What are some of the expectations that you have from the regulator? Abhishant.
Yeah, Shweta, hi. So as far as, first and foremost, a piece on the CBDC applicability part of it, and that's where I completely agree from a specific use case led thought processes, wherein, so frankly, look at it from a point of view of somebody who is working on the financial inclusion value chain. In their use case, if I have footprints available from a consumer standpoint, I'm in a position to do 10,000 other things for that customer, from credit to access to savings to access to other things I can do with them, right? However, when you look at it from the construct of a CBDC, are we essentially saying that the consumer who is in the last mile, who is essentially the cash consumer today, he's just waiting for CBDC to come, and then the moment CBDC comes, he will essentially move lock, stock and barrel ki bas अब मुझे जो है मरने के बाद जो निर्वाणा मिलना था वो CBDC से मिल गया, so therefore I will become digital. That's not going to happen. A consumer who is currently not digital, driven by UPI, driven by cards, driven by 10,000 other things, is not going to get digital because CBDC is going to come and going to make change in his life. It's like this कि I won't be able to do this कि मैं किसी को सर पे हथौड़ा मारूं और हथौड़ा मारने के बाद उसको आयोडेक्स दूं कि लो इसको लगाओ और मलहम लगाओ और आगे बढ़ो. That's not how essentially it's going to work from a value chain point of view. Now, specifically coming from from the lens of a fintech and the applicability in that value chain, I think one of the key things which will essentially change with that, and some of the specific use cases when you built on that, somebody like Vayana Networks, which is into trade finance, and when CBDC comes into picture, when they look at it from the point of view of exploring the factoring value chains, global, international factors market and all, in those instances, it will play a very, very important role and interesting role. Similarly, from a remittance and money movement point of view, what essentially Ripple was trying to do and still struggling to do in beyond SWIFT, in terms of allowing banks to have trade beyond the SWIFT kind of a network and all, in those instances, it will play an important role in enabling those use cases. So my point of view is that in all those use cases from a fintech standpoint, wherein either it is trade, either it is remittances, or it is B2B payments, wherein the participants in the value chain are informed and can benefit on a immediacy basis from the traceability functionality of CBDC, that value chain will benefit most. The players in those value chains either from a trade finance, remittance or others will find acceptance the most. As compared to them, retail consumer use cases, whether it is P2P transfers and others, I think it's at least in my mind, it's foolish to essentially suggest at this point of time that the consumers are just waiting for CBDC to come, and therefore the moment it comes, they will adopt, and they will be okay with the idea of replacing tokens with cash, and then they will be in a position to come on the digital bandwagon. I think that possibly may or may not essentially happen. Also, again, from the point of view of some of the financial frauds and other things which happen, and for which Ranja is the better guy to talk about in terms of the bips that we lose every year in terms of these fraudulent transactions. Creation of interesting use cases on top of CBDC for fraud and analytics and others might be an interesting area to be explored. I recently heard a startup which is initiated by one of the chief operating officer of a stock exchange in India, and he's building that startup which is going to somewhere top up the token framework and somewhere the value chain on CBDC side to create traceability and remitting, and reducing the fraud instances on such transactions. I think that will be the third category, which ideally should kind of flourish based on the CBDC value chain.
So thanks, Abhishant. Mohit, I'm going to come back to you. I know there are strong views on CBDC not being the right mode for driving financial inclusion. I have a slightly different view. I feel CBDC, when it comes, will eventually complement financial inclusion, will support financial inclusion. We're not waiting for it, but it will still drive it in some way. But you alluded to the point that the extent of participation by the ecosystem will determine success. Right? What do you think are some of the things that the regulator needs to keep in mind to invite this participation from the ecosystem?
I think, as Rana said earlier, he's looking at the pilot in China. I think we've got about 80 or different countries which are at different stages. There'll be at least 20, 30 of those pilots which are at different stages where at least there's something to be learned. And I think that's the first step here, because I still think it's not clear in everybody's head how does this eventually evolve. I believe it'll take a minimum of 4 to 5 years. India has been much faster in payments innovation than most other geographies. But even so, at least 3 to 5 years is the time period since we're starting about now to get something concrete on the ground. And I think that's the most important thing, is to learn from what's working for other people elsewhere. Because when you think of, a lot of people think of it in terms of crypto, but crypto also, I want you to talk about the anonymity piece, but today a lot of interest in crypto is coming from the fact that it is seen as almost like an investment vehicle where rapid appreciation and gains can happen. A CBDC will not have that, because essentially it is your fiat currency itself, right? So from that perspective, so that utility is not an investment utility, it has to be a functional utility, and that functional utility can come in terms of better payment flows. It can come in better in certain use cases. We spoke about remittances, we spoke about trade finance. It has to be those specific use cases. So we need to look at what's working in the rest of the world. Here, actually being a first mover may not be the smartest thing to do. It's actually good to see what works elsewhere and actually learn from that and then implement it.
Thanks, Mohit. I know we're at the top of the hour, but one last question to you. How do you think banks are thinking about CBDC? Are there any strategic direction in terms of changing some of the aspects of your business model, or it's too early?
Is that question?
Sameer, that's for you.
Yeah, look, I mean, on it, as I started this discussion by saying that we don't know what a CBDC looks like. So at this point, there are discussions and stuff, but it is just way too early to, all the points that all my co-panelists brought up are all ambiguous, right? Like we don't, I mean, even if you read what the RBI is saying and so on, so they themselves are in the zone of we are considering the following things. So at this point, it's very difficult to do anything. So there are lots of talks, but very little, very concrete direction.
Excellent. Thank you, gentlemen, for such great insights. So CBDCs have undeniably stepped into the limelight, and we believe it will come through. It's a matter of time. And I really liked the term Uber digital currency, Ravi, and I'm going to pick that up. But thank you so much, all of you. Thanks for joining me. On this note, we will conclude the session. Thank you once again. Stay safe. Take care.
Thank you.
Thank you, everybody.
Thank you.
Thanks, everyone. Thanks, Shweta.
Thank you.
Bye-bye.
Now, I would like to thank the chairperson of this conference, Ms. Richa Mukherjee. And I'm pleased to share with you that around 200 plus delegates have joined the conference today. Thank you once again for leading the conference and giving us your regular guidance. Thanks also to our sponsors, Platinum Partners, National Payments Corporation of India, PayU India, Gold Partners, Hero FinCorp, State Bank of India, Knowledge Partner, Deloitte India, and Media Partner, Telecom Live. I would also like to thank each of you for joining us at the conference today. We look forward to have you with us in future activities of CII. Thank you once again. Goodbye from now, and look forward to meeting you again.
lots of